Okay, welcome. Brian here,
Hi,
October. Hey, how are you?
good you.
Do okay, that's good. This is what we're going to talk about. I didn't get any questions from you guys about MotiveWave. So, just in case, this is what we can talk about. I've been running my MACD reversal strategy since about Thursday, Friday, so I've got some good stats here. Everything's being run in simulated mode, meaning not live trading. But I'm not going to do it until we get ourselves some decent profit. Lessons have been learned here, and what we're going to talk about first are the results of this testing. I'm using MotiveWave, the platform. I'm using Oanda for the FX and CFD product in Canada, and crypto. I am using Binance. All right, so let's get to it. Now, what we're doing here is we're just doing simple trades. We are doing minimal lot sizes. I put up a video on the digital mask. I'll be able to, or display mask for those that are interested in MotiveWave as a tip. One of the bugs that I'm finding with MotiveWave, I'm not sure what the problem is, but I think it's something to do with decimalization. If it's not a certain minimum, it won't report P&L. So what you'll see here in the trades so far, in simulated mode, these are, let me just pull up the positions here. So these are the current open positions right now. The bug I'm referring to is this one right here for the unrealized P&L. I do know that there should be P&L activity. Depending upon the coin, I do get some P&L. So, for example, again, this is crypto minimum amount. So here we're getting 11 cents profit on these coins here, BAND and LTC. Here on things like ZRX, Zcash, we're not getting any P&L at all. Some of the bigger ones like, I don't know, XMR should be getting some P&L. We should also be getting some, I do get other big ones like with XRP, Ethereum, Bitcoin, and so on. So I put that as an open ticket. So right now as it stands with the testing results, what I'm finding is, you got to stay on top of it. And I've kind of got the one strategy I'm working on through, which is my MACD reversing. This one I've coded up. It kind of works, kind of doesn't, but under certain conditions it will work. And we can go over that afterwards. So I just want to show you that it's a really mixed bag on the crypto side when it comes to the results and the crypto results using this strategy. But when you move over to the good old FX and CFD, it's a totally different thing. So if I go under here under my overall my trades for, let's just say right now as an example. So these ones right here that are done really well, the US 30, these are CFDs. US 30 at 150, SPX at 500, Australia and France got some nice profit as well. But when you leave it to be, to let it run on its own and to do the exits without watching it, meaning watching the exits unsupervised, this is what happens. We get these really big losses, especially overnight when you look at US from last night outside of the US market hours. We also get the same for the China 50 and another one with another big loss last night with the US 70. That was due to the fact of not watching this strategy run when I should have. But here I'm watching it and I'm watching the profit, and I manually close it. So I want to make that as a topic tonight to talk about, see what you guys think about this. So the only other, when it comes to Forex results, they're not nowhere as good as the U.S. markets. Right now, the U.S. markets are red hot. Okay, you might get some decent little profit. Again, this is one of those unsupervised exits at $19, $12, $14. Sometimes you might get lucky with something like this at British pound against Australian dollar of $30. So it's a mixed bag, but if you watch it properly, you can make some decent coin. But for now, the big one that's making money right now is the U.S. markets, and that's that. Now, in terms of what I've got currently open, with it being Monday night, I do have, let's see if I can scrunch this little guy down and show you what I've got running right now. So right now, what I've got open, just give me a second here while I properly set all this up. So what I currently have got running, set up is three things. So I've got U.S. China, okay. Now also the time frame makes a big difference. See, this is unsupervised here. I'm taking a loss, okay. I'm not watching that as I should right now. We've got the China 50 and the Australia 200, okay. But you can see these are moving nice. In fact, if I was to put on some manual trades with a stop loss and to take profit, I'd probably do better than with the strategy as it stands right now. But right now, I will say in comparison of these three, FX can do okay. CFD can do really well depending upon the market conditions. Right now, as I said, U.S. markets are really good. The crypto is really dicey. That's just right now with what I'm running. Now, that could be lot sizes, could be decimalization. I still gotta get a better answer from MotiveWave support on that to get a better idea. And that brings me to my next question: is let me ask this: does anybody have any questions or comments on that regarding? Let me just see here. If you got any questions, just let me know. Any comments on those results of what I've stated here? Okay, I'm just trying to see if there's anybody else out there trying to get in. Doesn't look like it. Okay, so we've got 4 people. I appreciate you being part of this. So anybody got any comments so far on what I've just shown? If you guys can hear me, give me a yay. I want to make sure that I am still being heard and you see my screen.
Yeah, I can hear.
Okay, awesome, thanks. All right, so I've done my check-in with people to see if there's anybody new. Doesn't look like it. Okay, so that's a trade right in there if you want to hear that little sound. So that's where I'm at right now with the conclusion of where we're at with testing a live strategy that I've coded up, reversing MACD with both Oanda for FX, CFD, and crypto with Binance. Okay, so my next question comes to you guys. This is where you guys come in. You know, with what I've shown, would you feel good about watching a strategy unsupervised? Because as I said, if you have this is live now, a live situation right now where you are running USD China 1 and you're taking a $5 loss, you could limit that, and that's fine and good. But when it comes to a live profitable position, I do think you have to watch it manually. Like right here, we got 2 that are in play. So this one just took on a position here. So I should be watching this. So that's a loser right there. So I have to watch that. Because on the opposite end, when it's profitable, you want to know, okay, it goes $10, $20, $30, $40, $50, and then it starts to drop back. With the strategy the platform won't close itself. You think it should, and it may and may not. But if you watch it manually, you will be able to see that and be able to close it out when you think you've reached, let's say, maximum for that position. Okay, On the other hand, if you let this run unsupervised, this thing with or without a stop loss can still go pretty scary. And where you really need to watch it manually is when it runs, okay? Because once it starts to move off your maximum, you may need to close it out manually. Anybody got any comments of that, or may think something different on that? Don't be shy. You can chime in whenever you want. And if you got a question on it, just let me know, or a comment. Because that's what I'm finding now is, I'll just say this. The automation is very good to find, like with MotiveWave, you have to do a setup manually. You cannot run, let's say, a bunch of watch lists or run a scan, and then it will just automatically open a chart and then open up a position. You can't do that. What you can do is you can do, in my case, say in the crypto, what I have right now, in the Binance, I have all these charts here, and some of them are probably in the neighborhood of about 15 different charts set up, ready to go with the strategy automatically that can be applied and activated and run. I think that will work when you want to watch certain instruments take an entry and use the automation for the entry. That's all fine and good. Where the danger comes in is where you're letting the strategy run by itself, and you'll start to realize you may be taking losses without knowing it, and big ones. And on the other hand, you may be taking some profit, which is nice, but how do you know when the maximum is? Because theoretically, the strategy and the automation is supposed to do that for you. From what I've seen for the last 4 or 5 days, that's not the case. So looks like I might be in a position to say you might have to run a strategy with automation for the automated entries, but when it does take on a position, you do have to watch it. And that kind of brings me back to this point here. Is it better to run a strategy specifically on the exit with automation, or to do it manually? And right now, I don't like saying it, but it looks like you have to do it manually and do it when the markets are open, because, as I said, especially on the Oanda side, or the Forex slash, you can see here that if I'm not watching this, like this loss has gotten deeper. I could, as like I said, I could apply a stop loss to it, but that's fine and good. But at the end of the day, I can do that as an insurance policy, which I'm not right now, and build it into the strategy. But where you need to really, as I said, watch these exits is when the profits, the profitable positions start to run. You do have to eyeball it as a human and be able to close it out. Anybody got any agreements with that or disagreements with it? Just chime in here. Let me know.
So this is just for one strategy, and that's MACD reversal, right?
Yeah, I mean, right now we have many strategies I can choose from. Right now, 2 of these I've got coded up. The rest are all out of box, again, using MotiveWave. But from what I'm seeing, playing with it enough, that you do need to let the automation on the strategy run, as I said, for the entry. But when it comes to the profitable positions, that you do want to watch the exits, especially when a profit does take hold.
So when it takes a loss, like it doesn't exit properly, what does it?
Go ahead.
So how, like, if we take a look at the actual chart and see when is maybe there's some refinement required, or maybe the MACD, because MACD has some kind of fine-tuning parameters, right? To find out when was a good time to exit and why this thing is not exiting.
Yeah, so that's a good question. So right now we're taking on this one, the Australian 200. You look at the chart right here. Okay, that's live. You'll see it looks pretty profitable right here. This is the loss right here. Okay, so if I was to,
So these candles, what is the interval of these candles?
what's the time frame?
Yeah, this is 5 minute, 2 minute,
15-minute right here as I'm circling over it.
1 5
Right.
Okay, so that lost at the very end. That's a horrible red at the very end. It in the 15 minute, right? One thing is if we make it like a smaller than 15, maybe 1 minute. What do we see?
Okay, here's the 1 minute right there. So,
okay, so this is a harmonical. See at the exit, I can see some harmonical pattern here.
Yeah.
Would you agree?
I can apply one of the harmonic patterns to it.
But yeah, so maybe the exit part of that strategy needs a little bit fine tuning.
Yeah.
And then like you have to, like it's a simulated environment, that's great. But if you have 5 of these losses, are they following the same pattern?
Pretty well.
Like the same pattern of loss?
Yeah, yeah, I am seeing that, yeah.
The same pattern.
Mm-hmm.
So it was really good here as soon as, but how it is still like this is a candle at 17 p.m. The candle is awesome, like it went up to 618, right? And then it goes a little bit bumpy. So where's the loss here? Like when did you enter?
From what I see, I have to check that
okay.
on the entry. Go ahead.
So I was wondering because we can see at the 5 p.m. 1700, we have a really nice up, like it's a good upside, and then it says something wrong. It's going down. But I was wondering when, like anytime you enter here in this chart, since 1315, I can see anytime you entered, you probably have some kind of, it's not loss. How this is a loss?
Well, let's go over that. So we have unrealized profit, unrealized P&L of 576 in the hole.
Sure.
Our entry price was 61.93.
Let me take a look. Okay.
And the last price was 61.85. So let me pull up that chart again. This one right here, I'm going to make this a separate window. Okay, here we go. So let me just pull that to the side, go back to our position. So if that's the case, we are looking, here, very easy to get lost in here. Let me just expand this a little bit. So if I'm not mistaken, the entry was at 1915. So if you look at the bottom of that window.
Oh, okay, so you didn't enter at 17. I thought you entered at 17.
No,
you actually entered in 1915.
That right there where my vertical, 1915, that's the entry.
Entry, and then it went down.
Right.
So the bot doesn't have, that's the wrong entrance, not the exit. The bot, there's no chance this bot has any chance to winning.
Yeah, so the entry was in the overbought, isn't it?
Say it again?
The entry was in the overbought position, isn't it?
It looks like it for that. Like I want the bot obviously to pick up this entry right here.
Yeah, yeah.
But you do see this is where the bot struggles. It buys it in the upswings here as soon as a loss comes in.
Yeah, so that's the problem.
Yeah.
So that's more of a parameterization because if, like, first of all, I don't think this is a, okay, so you wanted 1915, but 1915, the bot saw like a good upswing at the before 1915, entered, but that's exact time that it actually is going down. So no chance for this bot to win.
It's coming back now, right? But at the end of the day, what I'm trying to tell you is that you do have to watch these trading conditions.
No, this is a strategy. There is a formula called sharp strat, like a sharp. There's an indicator that says how safe is your strategy. Even it's winning, but it has this kind of turbulences in like in prop shops. They would say not to use this strategy because it has a lot. Like right now, it's going down. Again, it goes up. Still, like some kind of prop shop manager or someone like a team lead or something would come and says, you know what, let's not use this because it has too many turbulences. It doesn't have the smoothness of a kind of a strategy you would expect. I'm just saying, but to be honest, I'm very new to this. I'm just reading books. I never had like a practical experience.
Yeah.
So I just want to have a disclaimer that I probably am wrong. I'm just sharing my thought here.
No, that's fair. It's fair comment.
Yeah, but what I look at is the strategy. Is it a MACD strategy? I wasn't. Yeah, it's a MACD.
Yeah.
Yeah. So basically, it's delaying before it enters, isn't it?
In these flat sideways conditions, the answer is yes.
Yeah.
See, the problem is it's all with this particular strategy. It's all about luck that you get, like at this entry where it does have the upswing, but you can see the majority of these other positions here, they're all in a sideways trading position. So that's why you start to see these losses.
Okay. Now, if we want to go back and then see if there is any way to train these, like because my background is more like a machine learning and AI.
Yeah.
What I would do is I would take these numbers and like for past like 1 month or 2 months, and then have the MACD, because when you do the MACD, I think you enter some kind of parameters. Is there any way that we keep changing this parameter until this parameter of the MACD that picks up at that 17 o'clock? That 17 is a magnificent. Why it's not taking that? And then because the crossing, the reversal of the MACD between red and then the other one that crossing is not tuned. So one option is to take this and then have a loop, like a traditional older school loop, and says and then what is this MACD parameters? Can you share that?
Sure. It's there. I'll just apply this to here.
Because MACD is a wild.
Yeah. So I'm just using the default right now,
which is 12-day, 26-day.
You got it right there. Yeah.
Yeah.
Okay. So is there any way to loop, and then it might be a Python thing more than this, because this data can be easily exported, and say, you know what, I want to get, instead of 1226, I'm going to start with all kind of different ranges, and then see if I can get a buy signal at that. That's a kind of brute force search.
Yeah, there's a way to do that with the back testing.
Sure.
Would
that help? Do you think would that help?
No, because it's still static. Like finding optimal periods with this particular strategy may help, but no matter which strategy you use, you'll be doing the same process of what I'm explaining. You can use this potentially for entries, but you cannot use it and rely on the exit for automation. That's what I'm finding. Okay. No matter what you use, because you have too many factors that go against the strategy. No matter what you use to try to find a more profitable position, when you think it should be profitable, it's so random. It's tough to find.
Okay, and that, so the one that we just saw, it wasn't more of a exit signal. It was more of an enter. It entered in a kind of situation that was too risky.
Right.
So that's the first thing. Now it's just one of those. You showed like 5 or 6 different reds, but that was just one of them.
Right.
For that kind of assessment. That's one thing. And then sometimes one consideration is to combine a few strategies together, because MACD is too traditional.
Yeah.
Especially this is Forex. I'm to be honest, I'm very new. This is Forex, right?
In this case, it's a CFD, Australia 200.
Okay. So I have no idea what you see. I'm just looking at it from a technical analysis chart. But right. This asset, like a CFD, is something I need to learn.
even if you factored in this one, this was another money loser today. This is a 4x pair, and as I said, I just manually closed it, and it still took some pretty heavy losses.
Sure, sure.
So,
Do you determine the time frame you're gonna use the strategy on, or you can use it on any time frame?
Yeah, but you're going to run into different factors, because you can get, if I used it on an hourly basis, as I said, if I was to open up that window here, see, this is a 1 minute chart.
Yeah.
If I use that, it's going to be too noisy. If I use a 5 minute, it's a little more predictable. And then the 15 minute, you can see that's a nice, more predictable trend. So it should theoretically make more money, because that's a solid uptrend that you're looking for. And then when you look at the 1 hour, it's the same thing. It's just suddenly it should be going up. But this strategy is running on a 1 hour basis, and it's still taking a loss.
Oh, okay.
Right?
Yeah, but where did it enter? That's the thing.
Yeah, we already determined it's at 1915.
Yeah, so the entry is the problem then.
Yes, at 1915.
Yeah, so the entry is the problem, because
Yes.
it looks like, you could be making money, but you entered when it is almost done.
Right, but here's the problem. When you talk about all these different parameters and overlay with all these different indicators, as I said, right here, we have a right where this little hand is right here. It takes an entry, exit. So, but it's still in a sideways mode, and same along here, these two right here, or this one and this one. So that's pretty hard to determine when it takes an entry, because, as I said, you're wanting to take positions when it's just ready to break out. That's the perfect world we're looking for. But the challenge here is, how do you prevent the entries that are just going to go sideways and maybe even lose money? How do you like with a MACD? What other indicators can you use?
The other indicator comes to my mind is the concept of level 2. Now, level 2 doesn't apply to Forex. I know very little about Forex. All I know is the order book. So if you're working with Binance, you can see all the buy and sells in the order book.
Right.
And then when we are working with the stock, also we get all the level 2s. And then we take a level 2 and it says, even though everything is looking great, because when you do the MACD, you are looking at your rear view. When you are driving, you can see your rear view and it's okay, the highway is great, everything. But also what we have is in a kind of windshield, we see that there's a lot of cars in front of us.
Yeah.
That is, so a lot of time people say we don't know what's going to happen. Well, we know, because you can get level 2. Now, I ask around, and then my understanding is in Forex, there is one indicator that MetaTrader provides. Yeah. And that indicator tells you that so whatever you look at back from MACD in front of you, these are the volume of buy and sell. So there is a reason in Forex you cannot get that level 2, because it's massively large. So you can't even possibly even get those millions of buy and sell. Okay. But there's an indicator that says, by the way, you are entering, there's a lot of sell order here, or there's a lot of buy order here. Can you add that to your strategy, or is that available? So behind the scene, this is through Owanda, right?
Yes.
Okay. So does Owanda provides that?
Yeah, you do get level 2.
Level 2 on Forex?
As far as I know, yes. You do get the order book.
But that's massive. Like it's like more than 15 million items. I think there's one more on top of that. It says just one indicator. And that indicator is telling you that we are entering here, there's a lot of buy, and then the average buy is this. So you know before you enter, you know that what's happening in the pipeline ahead of you. What is that, the name of that indicator?
I don't know in terms of the study in MotiveWave, I don't know the name, but I do know.
So MetaTrader, and I know folks who trade in MetaTrader, they have that indicator.
Okay.
And then that indicator, so you can go to order book, but it's a huge amount of calculation. It's very simple. When you do mark Apple stock, so the volume is huge, but is something manageable.
Okay.
If you do crypto, the volume is so low. So always you can process order book. In Forex, you cannot manage, I don't know the CFD, but certain kind of currency pairs, there are so many volumes that you can't just actually like humanly or like algorithmic wise do the process the order book to assess that is it worth entering because it's a stormy outlook out there based on the order book or not. But there's one indicator that based on that indicator should tell you that, you know what, you're entering and a lot of people are buying, so it's good time to enter.
So you're referring to something like this for Forex, which is an Oanda indicator for MetaTrader, and then base it upon the volume of the buys and sells.
Yeah. So when you enter, you gotta see, am I getting in my level 2, like whatever the name to term, that level 2 is a misleading term because every asset class, they have their own name. But let's say in a term of a stock term, it's a level 2. If you enter, before you enter, there's one more thing. What is that indicator? Because I'm entering in the hope of a long, right? You're entering to long it. And if I'm longing it, do I have a lot of buy order there? Yes. Now it's a good time to enter. But the position you showed me in the MACD, you entered with a blind spot, like the outlook, like a front windshield is not in a consideration.
Right.
And then the strategy doesn't know that, because I bet if you had that indicator over there on your chart,
yeah,
it would tell you that you're entering, you think you're going to long it, but there are so many people trying to sell it. That's something comes to my mind.
Yeah.
Does it make sense?
Yeah, absolutely.
That's one thing to consider. And this kind of analysis, I wonder, is it easier to do this in Pandas or MotiveWave?
It depends on the platform. If you're doing it with MotiveWave, well, I should say depends upon the exchange or broker. Depending upon the API, you can do it both with Oanda and Binance. In Python, they do give you the access to the order book.
Not the order book. In Forex, the order book is so massive that not a personal computer cannot do it.
No, but it's it's available at the broker level.
I know. And then the broker, because they have different platforms, right? There's a broker, there's a switch. The infrastructure of Forex is another topic that I like to learn, but there's an infrastructure behind it, like a backbone of Forex. And then we need, there have different switch hubs that they buy and sell all those pips. And then on that level, they just have one indicator because it's no way, like you have 15 million buy and sell, there's what you want to do with. But they just give you one indicator between -1 to 1 or whatever it is. I'm just hypothetically, I don't know that they're normalizing.
Yeah.
That's one item. And then the second one is, like, I think every strategy should have is the concept of news. Yeah. Now, news is like everything happened there. Not everything, but if you see a drastic up and down or a trend, it's because of a news happened a few hours ago or even 20 hours ago, right? So we see October 02 to October, for example, 08. Things are going up, right? That's a long term, quite long term. But if it is going up or going down, it's because of a certain news. And that's one of the topics I wanted to see, have your thought, Brian, on that. That news is expensive service. It costs like $200. A good news service is cost $200 a month, and you can get all the currency pairs, things like that. But I think certain platforms, they give you just another indicator, like because you have to build a hell of an algorithm to get all the news, do the natural language processing algorithm to extract the sentiment analysis and do the sentiment analysis and then track, say, okay, to quantify that news to a number, bring the number into your charts to bring it to the decision. That's a lot of work, right? But certain platform, or there are certain services that's something I'm trying to find, and there's so many pollution on the internet to find that. That I just want for this currency pair, I want to have a number between -1 to 1. And then that number, I want tell me that what is the sentiment of the news. over there, like what Bloomberg is telling you about, what investing.com is telling about it, or what all these like a different news sites that are telling about it. And then that should also be incorporated into the to the strategy. For example, your pair is Australian, and then if Australia has a certain important, I don't know about Australia, but let's say Canada. Like if there's a negative problem about oil, definitely there's a negative sentiment about Canadian dollar. So whatever currency pair you're doing, if you have a negative sentiment about negative news sentiment about Canada, whatever technical that you see, that indicator should be brought into consideration.
Right. Now, what are you wanting to trade mostly right now?
Come again, please.
What type of asset class are you wanting to trade on? What to focus on?
Right now, I'm learning crypto, but I basically, when it comes to the technical analysis, like all these charts, the concept applies to all different kind of asset classes too. Make sense?
Yeah, but when it comes to crypto, I think like a lot of the coins out there, like I don't know, Atom, Tezos, whatever, they don't really have a lot of news for the day that impacts
then it doesn't mean it doesn't apply. So there are certain things. So one indicator, if it doesn't apply to them, then that's different ball game. But if you know there is like for example, in United States, if they're putting a mandate in IRS that are you doing crypto or not, and that is a negative sentiment, right? Yeah. That negativity should somehow brought into consideration of every strategy of crypto, because after that one, all the crypto went down. Or that a broker company that they are going after in the United States, that is a negative. It impacts all the cryptos. And it might have a few exceptions here and there, but in general, what I'm implying is news is if a strategy doesn't have any awareness of news, it's just one important piece of information that is missed.
Right.
Yeah, I think news is important, but again, it's a question of the interpretation of the news, you know.
So that it's a chain effect. Like a lot of manual traders, like they just like do the day trading. They have all the outlook and then get all the news. They pay $200 a month for that, US dollar for that, to get the proper news. So whatever, let's say they are doing a stock, they can get all the news about it. Not the like a CNN.com kind of news, like a really good processed news.
And I guess maybe if you're a day trader, you can do that. But if you're not day trading, I think news, sometimes you have to wait until things settle down.
It doesn't change the importance of it. Means
no, it doesn't.
Day traders,
yeah.
So let me rephrase it. There are day traders who do the trading, and then they have news in their vantage point. You have a bot, a strategy that has nothing about, it doesn't know anything about news, and then all kind of MACD. Of course, it will be behind all those, like the performance of the strategy would be behind those manual traders who have to keep an eye on news.
Yeah, no, it is key. But what I'm saying is that once all the news has been, consumed, then things just get back to normal. That's what happens, and the fundamentals matter more than anything else.
I see. So I wanted to see what are your thoughts, like what kind of news sources do you folks consider?
I just put it on the screen there. This is the best one I could recommend, but I was asking what kind of asset class you use, and if you are using Forex and you want something that's affordable, I would look at like IQ feed, because I can overlay in my MotiveWave, I can add in another workspace, the the DTN IQ feed as well. So I'll be able to get all the secondary or second level data all in the same workspace.
I see. I learned about IQ feed by your PDF, Brian, and then it's very, very useful. Thank you for that.
Yeah. I'm just putting it out there because it's very cheap, $35.
I know. So yeah, so I was reading through one of your articles, and it's amazing. I didn't know it provides news.
Yeah, the news feed on the basic system is included as the core service, which is free. So I don't know the name.
Unbelievable.
Of the source. What's that?
Wow. It's amazing. Like I'm killing myself. This is searching like a week to find a good news source, and everything is $200 unaffordable, crazy amount of prices.
Yeah, well, IT Feed's the most affordable. That's why I always.
And then you just bring it's amazing. It's good.
We always go in circles, my man.
Of course, yeah. That's great.
Don't be embarrassed by it.
No, it's great.
Yeah, but in terms of Forex, most of the things are predictable because the news that you're looking at, like the economic calendar, it's there. You can look at what is going to be reported.
Yeah, I mean, this you would think is a predictable trade, right? I mean, you look at it, it's trending up. That's an hourly basis. But yet, when you look at the positions and when it's taken, they're losing, right? So you got to ask yourself what's going on with that. But go ahead.
Yeah, I think because this is purely technical, isn't it? You're not incorporating anything of fundamental. Like you're not incorporating what was reported, like to say the governor of Australia made an announcement or something like that, or the reporting any interest rate changes or stuff like that.
Right.
Is not being taken into consideration. It's purely technical.
So correct me if I'm wrong, that the fact that something is technical or fundamental should not impact, like change the idea of when you are doing algorithmic trading, means your algorithm, you should say, you know what, this is just technical, not fundamental. I'm not going to bring it in. It is like news also is something that might help. Regardless of its technical or fundamental, it still is useful. For example,
that's what I'm saying, because this is based on purely technical. You don't know what news you're considering when you're entering, isn't it?
Okay, so I should go do my homework. There is an indicator in Forex, and then it has the new sentiment about that currency pair, and then that one, I should go ahead and then do my homework and then see if I can find the name of that thing. It is in the MetaTrader.
Yeah, because when I traded Forex, most of the time I looked at the economic calendar, and that was the best guide, because in most cases it was predictable depending on the rating, whether it was high or low or medium, what the results will be if the report is above or below, depending. Either the currency is just going to shoot through the roof. It might take a few minutes or it might take a few seconds. So that's one way of trading. And the other way is to find out, the economy of the country, what it is doing and stuff like that, as a long-term view.
Sure.
So if there is an indicator that can help you incorporate that into the analysis, that would be good. But I think for technical analysis, I think you just have to try different indicators and try to combine them and see which one works on what time frame.
Yeah, that's not easy to say, because it's without, yes, news, and as you said, the economic calendar is the best factor, but you're still having to make the call if it's going to get impacted in a positive or negative way. So you're still at the mercy of the call if it's going to go up or down. You know what I mean?
Yes, but you see, most of the time you've got enough time to make that call if you are doing it manually, because some of the currencies, they immediately take off, maybe within seconds, but some of them they don't, until everybody else has assimilated the news. So you have enough time, like if you're trading, let's say Japanese yen, or you're trading, you can see the trend depending on the expectation. So you can put that into consideration. But what I'm saying is, with technical analysis, if you're not looking at the calendar, then the strategy has to be based on the indicators that you choose. And that would still work out, because I've traded certain currencies based on technicals as well.
Well, a question for you. You said that you traded options, right?
No, now I trade options 80% of the time. And then, I'm going to reduce that because I'm getting into crypto. But options is my main thing now. I used to trade Forex.
Well, that's what I'm saying, is what made you decide to quit Forex?
No, I haven't quit Forex. It's just that I found options is more profitable for me because I do swing trades. And I've done a lot of work in options that it's almost predictable for me what results to get. Whereas with Forex, it was different.
You said it's more difficult to predict swing trading in Forex.
No, with Forex, you need to use a lot of margin to make a lot of money, which I don't like a lot.
A lot of leverage, right?
Yeah, I don't like that.
Right.
Whereas with options, I don't have to do that.
Yeah, you don't need leverage.
No. So I know exactly how much I'm going to lose or how much I'm going to put up, and then I can limit my losses. Whereas with Forex, I mean, you can put stop losses and stuff like that, but you have to use, obviously, leverage for you to make a lot of money.
But,
is options?
Go ahead.
I was wondering, is options easy to learn? Like, how is the learning curve to trade options?
The learning curve is the problem.
Or it's complex?
Not really. Well, yeah, complex, because there are a lot of things to learn, obviously. But apart from the learning, the theory, then you have to get into the pit itself, the actual trading. And that's where now you start actually getting into the nitty-gritties of the kind of mistakes that you're going to make and the kind of problems you encounter. And after you get over that hump, then you can start taking money out of the market in a predictable way. So the learning curve is very long, for sure, depending on the individual. But for me, I work full time, so it took me a long time because, and before that, there wasn't the apps. So it was difficult for me. I could go home and put on a trade. I don't know what is happening during the day, so I cannot exit that position if it is in the money. That's what I mean.
I see.
Whereas now I can do it, because it's on the phone. So if I made 50%, 100%, I can get it. Whereas before, options, there's also a lot of things to learn, time decay and stuff like that.
But for you, what attracts you to crypto is just the upswings are so can be predictable.
No, what attracts me to crypto is because it's a new asset class and it has a lot of potential. It's a potential to make a lot of money, because you saw what happens in 2017, and people became millionaires overnight. So it's a promising asset class. That's why I like it. And also there are so many opportunities. There are so many different currencies. Yeah. With Forex, you are dealing with basically 8 at the most 10 major currencies.
That's right.
Yeah.
And is it safe to assume that Forex, are really good traders are on Forex, so it's harder to make money out of, whereas cryptocurrency, not so many people are paying attention to cryptocurrency. So
No,
that's
I think Forex is because it's a mature, mature class, and also there is a lot of money to be made if you have a lot of money, because there's a lot of institution money. I mean, Forex is what, 5 trillion a day?
Yeah, something like that.
Yeah, so it's huge money. So people, I think the most of the people make a lot of money are the people working for banks or institutions, because they are playing with $200 million, $100 million, So if they make 20 pips, that's a lot of money, For me, if I make 50 pips, it's nothing. So that's the difference with Forex. That's why all these big institutions, they have got desk trading Forex, because they can easily make a lot of money in a few hours, because currencies like Japanese yen, the euro, they can go up maybe 80 pips, 100 pips. So that's why Forex is, compared to crypto, I think that's the only downside, is that you have to have a lot of money, to make money.
But it sounds like correct me. Let's see if what I'm saying is makes sense. That whatever you're doing in Forex, there's so many really expert black belt trading machines out there that is hard to beat them. Whereas when you are with cryptocurrency, even though the money is not that high, like the volume, but still you are not dealing with such a great traders or machines.
No, that's true. That's true. That's a very valid point for sure. Yeah, because it's a mature market, and there is a lot of money to be made in a short time if you have money and you have a system. If you're a high frequency trader, you can put up a trade, and within a few seconds it makes you so much money, or a few minutes. Whereas in a Forex, I mean, crypto is different. Not yet. And you see crypto, there is about 1,000 tokens. Yeah, so it's different. But even in Forex, you can make money, but compared to crypto, hands down, as far as I'm concerned, crypto is,
It's just there's more volatility in crypto, though. A lot more.
Yeah.
And the volumes for September were pretty low, so the trading opportunities weren't there. But if I was to show you the trading opportunities since Friday in crypto, I mean, there were some coins that moved a lot, 10%, 50% since Friday.
Yeah, because in crypto, there are, tokens or currencies which have doubled in maybe 2 weeks, 1 week, a month.
Don't you remember, Boyd? We saw crypto, new ones were getting listed in the DeFi, and they were moving up 500% in.
Exactly. Yeah. So if you're on the right side of, you could make a lot of money, and you don't have to have a lot of money, because those things are moving like crazy.
Yeah, if you get the right call.
Yeah, you get the right call, and if you do your homework, I think you can, because there are so many different opportunities, and most of them are selling at under $1 or 50 cents.
Yeah, and you don't need the leverage to get those kind of good returns.
Exactly. So.
And with Forex, you need them.
Mm-hmm.
And it's a higher risk in Forex if you don't get them. Plus, the other thing is, like, I don't want to say, but brokers out there have those stop hunting mechanisms where they're going to fake you out and take you out so you lose.
Yeah, absolutely, because they're trading against you.
Yeah.
So not that I'll still trade Forex, but it's not my number one at the moment.
Yeah.
What is your number one?
My number one is options, then crypto.
Options in crypto. Wow.
Yeah. Options, crypto, Forex.
Yeah, options is way too advanced for me.
Yeah, you know, it takes a lot to, you know, it's a different animal. It's too much work. But you know, because for me, I've been I've been studying it for a long time, and I've lost a lot of money. But you know, at least I understand it.
Are you using also Greek analysis in your option analysis?
Yeah, you know that you know the stuff about the Greeks, you know, the deltas and the all that stuff, the theta. But you know, after it's like everything, you know, it's like driving. Once you are learning, you have to, you know, push your hand outside and stuff like that.
Yeah.
So it's the same thing like learning options. You learn all the Greeks, you learn everything about the theory. You have to understand it because sometimes you may need to use it. For example, if you want to buy a car, you have to understand the delta. You have to understand the, you know, the strike price, the expiration, the effect that's gonna, you know, be there depending. So all those things, those are the things that you have to know what strike to pick, what expiration date. There are a lot of things that you have to understand. But once you understand that, it just depends whether the stock is moving or not. That's it. Because an option is a derivative, that's all. It's derived from whatever instrument. So once you understand that, but you have to know the theory. It's just like in any profession. If you're a doctor, you have to know the theory of the anatomy of a human being, isn't it? Even when you are just, you know, prescribing aspirin, that's the same thing. Once you understand options, but some people get into, you know, all these strange strategies like iron quandles and stuff. It's a waste of time, you know. Just straight understand, you can make a lot of money.
Yeah, if you know how to predict it.
Yeah.
Consistently.
Yeah, if you know, you know.
Yeah.
Like I can just give you an example. QQ. You know QQ?
Yeah.
It went up today, it went up 11 points. And I tell you, so many of those options doubled just in one day, today.
Oh, I believe it.
Yeah. That's why I like options. You could have traded and QQ is a very, very powerful, you know, it's high volume. Everybody trades QQ.
Yeah.
It's a very powerful trade. You know, you can make a lot of money just by trading that if you know what you're doing.
Yeah.
You know. So that's the thing with the stock market, because like crypto, there are so many stocks. It's not like Forex, you know. So once you understand, you have so many options to choose from. And unlike before, there weren't all these tech companies like, you know, Facebook, Google, Amazon with, you know, huge volumes, you know.
Yeah.
So
it's crazy once you know how to predict it, because like I'm just looking at the CFDs on the U.S. markets, and for the last week they're so predictable.
Yeah.
And,
oh yeah.
And when you look at the same with here, like the Chinese yuan, or like I knew that was going to go up, and look at this big bar right here last night. This is another one. It's very predictable.
Yeah, most of the things are predictable because it's human beings, you know.
Yeah.
You know, it's a confluence of human beings who are making decisions. Even when you automate something, like you, Brian, you automate something, you're doing it because you're using your human input, you know. So that's how predictable everything is.
Well,
you know?
the problem though with the automation is it works fine when you design, let's say, a strategy, assuming certain market conditions will allow it to trade and trade profitably. The problem is the market conditions change so much.
Exactly, yeah. That's the thing.
Strategy becomes useless. But I'm not saying it's completely useless. You just got to wait it out for the next set of market conditions to come back, so where you can start using that strategy. That's the biggest challenge.
Yeah, but the goodness with the stock market is most of the players, they have got long-term view. They're not. I mean, there is high-frequency traders, there is all these other day traders, but the big ones, the institutions, they don't want to sell after a few days, because they've got regulations which guide them how they approach the market. They are not there to buy today and sell tomorrow. So that's why most of the things are predictable. And most of the times they they all gravitate towards the same stocks.
Pretty well.
Yeah. So right now they are gravitating towards technology because everybody's at home. So if you wanted to make money, you could have made money in Zoom without much ado.
Yeah.
So.
Yeah. But how do you feel about automation versus trading manually? I mean, do you have a lot of faith in automation completely from end to end with a strategy? I guess that's what the general question is for tonight.
No, I think, yeah, I think it is, more especially when I look at Forex. Yeah. Because otherwise, I think it would be difficult things move so fast, So as long as you can find a strategy that works, automation in Forex, I think, is the way to go.
Right, but how about crypto? I mean, you think that's possible?
I think so too. You just have to find the right, currencies to trade.
Right.
Yeah.
How
Yeah, crypto and Forex, yeah. I think you can automate easily.
So from your research, Ali, how do you feel about that statement? Do you have confidence that you can find a universal strategy that will work quite a lot of times in most market conditions? Be able to find something with automation that actually works?
No, in my opinion, it is impossible to have a universal strategy.
Right.
The way that I see, if someone is in this business, they might have a strategy that works for maybe a month or 2 or 3. While they are harvesting from that strategy, they have to spend another 4 months to find their next strategy. So this is a business of hunting strategies and then being able to find new strategies.
Okay.
Like, for example, in my trade, I'm in IT. I do software engineering for a living. And no matter what always when you harvest from your knowledge to deliver a project or something, at evenings, you have to find what's next. And finding a universal strategy, that is a recipe for not being success. It just, but it's the lifestyle of a successful trader, which should be in a kind of thing that find a strategy to make yourself profitable for next 3 months, and then while you're harvesting from that, find your next strategy, because there's no strategy work for more than 6 months or so. That's my understanding. That's what I hear from other people. Now,
okay. So let me ask you this: what you say, if I go on a daily chart like this, where I see this particular one, CN50 is going up consistently, or let's say the Australia 200 on a daily basis. Okay, better. Let me pull up one of the US ones here. So let's say if I pull up the US 30, these are CFDs, remember? Or SPX 500, which is the S&P. Okay, so if I show you this chart, daily time frame, from this point here in April, do you think from April till September, and it had a little pullback, starting to recover and actually start to profit again, is that one strategy in itself? That's all I need to do is do a buy and hold, and I'm done for this particular strategy?
So there are two things. There are strategies for manual trading, and there are strategies for automated trading.
Right.
And then for automated trading, If you are doing a scalping, like every position is like between 2 to 4 minutes,
Yeah.
like more less than 5 minutes, or you are doing like a trading between like an intraday, like it's like a 4 or 5, 6 hours of trading, or longer than that. I don't know if you need a machine to do it for you. These are all the factors. So when machines comes in, the value that the machine brings, when if a algorithm is doing it, the value that brings is it can do things that human cannot do. Means human cannot do well when it comes to 2 to 3 minute kind of turbulence or price up and down. That human is so hard for you or for anyone. I'm sorry, for anyone to go through so many different, let's say, currency pairs and then find, okay, this one is doing something, and then get that. And even you have all those scanners, but still you have to watch. They are just one person, whereas a machine can do a lot more than that. So the advantages a machine can bring is to do quicker and smaller items, but do it a lot more often. It's similar to algorithm. So one advantage of machine is can search between 10,000 items in a fraction of a second, but it cannot detect a face. So the point I was trying to make is, I think this, if you are talking about going from March to October, that's a manual trading probably. That's like a 3, 4, 5 months. I don't think a machine should come to this. But if you are talking about every 5 to 6 minute kind of trading, then machine has something to say. What do you think? I wanna hear your thought.
Well, I've been doing this for a while, and I think automation's great for what you just said, where I've got a couple of Python scripts that will scan. I only trade in USDT, in Tether. So I have, in my case, let me bring up the other one here. So this is the crypto. So if I bring in my watch list, hang on here. Let's see if I can pull up a watch list here. This one, and I'll just call it a general USDT watch list. Okay, USDT watch list. So I'm going to create now a watch list in here. Okay. Where's my watch list? Right here. So I'm going to load this one up. So now I have 100 and however many assets it is, 120, 130. Okay. So I know that there's certain ones moving right now. This is where automation kicks in. The problem is, let's say if I went with the top 5, 10 of these that are moving right now, it now comes down to being a racehorse. So, or sorry, a horse race to figure out which ones are about to break out so I can start picking up on these bigger moves, eventually moving up like KSM, BLZ, and so on. That's the challenge of the automation, because if you pick up one of these particular ones, let's say Wi-Fi I in Tether, and it's moving at 4%, and I hope that it moves 7%, do I put on a strategy or just even a manual position and hope for the best that I actually get a profit from that call? That's kind of like, it's a 50-50 thing roughly between automation and human skill, because the automation is very good to pick up what looks to move or is moving in real time. That's where automation is very good. The challenge now is, out of those particular ones that are moving, which ones will actually move and move higher? And that's what I'm facing right now. It can kind of work in Python, but the thing is, with Python, that brings in a whole nother world of problems. But when you're in a trading platform like a MotiveWave, it does a lot of the heavy lifting for you, but it doesn't change the fact that you still got to figure out of, let's say, these right here, the top 5, top 10, which will actually break out and move up higher. And it really all comes down to timing and luck.
Yeah. So everything boils down, that brand, to a strategy. You are as good as your strategy. You means, I'm sorry, my English is a kind of the way that I say
No,
my
don't worry
ticket.
about it. Don't worry about it.
A trader is as good as its strategy. A trader might have all the, and then the way that I see, like I notice a few great strategies. For example, in the stock market, there is an open range breakout, and there is one more open range OR. Where's my note? I was reading about it. So that is strategy. Somebody figure out that if you have a correlation of an ETF and that is got, and then that stock symbol, and then go after like combine the two strategies together, it would be profitable. And it was profitable back in 2011. It was massively profitable. But that individual, actually, he implemented the whole that thing in an Excel sheet. You know, Excel has this VBA. He actually managed to implement that in Excel VBA, and it crushed. And still today, he doesn't know why his Excel crashed, because he didn't have the technical knowledge to do it. But okay, the point I was trying to highlight is strategies going after MACD or RSI and this kind of thing, that will not go anywhere.
Yeah.
Absolutely not. It's good to know, but all these amazing kind of ideas of, and then the other one is front running, and then this. So these are things that someone with data background probably would do magnificently better than a traditional trader. Because trader, they like to see any kind of platform and then put a few curves and things and then say, okay, MACD up and down. Whereas someone who can, and then on top, so it's a kind of combination of a skill. Like in my trade, my profession in software engineering, if someone doesn't know OS and doesn't know a few database platform, doesn't know data processing, doesn't know infrastructure, all packaged together, they will not be able to deliver successful end-to-end project. Somewhere something will fall out. Same thing with trading. If somebody just knows how to put all the charts and interpret the charts and then point a few items in a kind of technical, it will not go. It's a package of all the skills together that would help. And I'm trying. So right now, all I'm trying to do is empower myself to hunt strategies. Because I know for a fact that if I go to MotiveWave, I can learn it, and then there's no problem with that or anything. But how do I hunt a strategy? And then once I get the first one, I make sure that after 3 months, I can hunt my second strategies.
Yeah, but I think, you are right about automation. But the other thing with the market is you have to understand also, it's also about psychology of the market. Because
that's where the news coming, my friend.
Yeah, because
that's
news, but also you the individual, how you approach trading. You can have all the skills. Some people would rather be right than make money. That's what they say in the market. You could be.
This is where I'm trying to highlight that modeling your thought. Like you might have some kind of, you think there are a lot of people say, how did that come? Say intuition. It wasn't intuition. When somebody makes a call, like in a chat room, it seems that this is the right time to buy. And so what happened? Oh, I've been doing it for 20 years. Is intuition. No, that's not intuition. Maybe you don't know how to explain your thought, but it's not intuition. It's when you are in a kind of like, again, I see the whole planet from my profession point of view. I'm a software engineer. So you can be the best, let's say, banking expert, but if you cannot model your thoughts into an algorithm or a systemic way of doing it, it's a kind of problem because you cannot do it systemically. So, for example, you mentioned a lot about the option, and then there's a queue, and then all kind of like a good terminology is here. Either you can model it and then create a good mathematical model of what you just said, implementable, that's good. Otherwise, it's just the intuition. And then the matter. So let me just make my final point to get to this. So I give this background and then give you the final point.
Yeah.
The final point about what you said about the market sentiment or things like that. People are systemically approaching that, and they're doing amazing work. That you need to like. because you have to go one step back. When you go, like a lot of people, like the one hot buzz is in the past 10 years is machine learning. And then when you do machine learning, there's something called deep learning. And then deep learning is based on a kind of multi-layer neural network. All are buzzwords, right? You probably don't know them. But all I'm saying is this neural network is an amazing black box that you enter a few indicator to it, and at the end, it learns that whether should you buy or not. It's amazing. Yeah. So wait a second. And people say, okay, I did that. I give the 3 Mach tier thing to my deep learning, but it provided the wrong signal. I said, because the input to that learning platform is wrong. Your input is, you can't, for example, if you're evaluating someone to become a brain surgeon and train them about carpentry, of course, that cannot provide a good input. So finding the good input. The amazing work that I can see and that I'm trying to do is take the news, like that's not 100%, but 10% of our strategy should be based on news. Take that news, do the sentiment analysis with the cheapest way possible, not like an expensive one. Transform it to a number between 1 or -1. And then see if you enter it to your strategy, whatever the complex strategy it is, it helps your strategy. That's one point I want to make about your concept of, you said intuition. Can you model your intuition? And then your intuition is more of a kind of based on news or sentiment of the market.
Are you a trader now?
No, I'm good at studying. I do a lot of no.
So there you go. You have to become a trader first, because once
I see your point. Yes.
Yeah. Once you are in the pit, then you learn the skill.
True.
You know, theory is one thing, a skill is another thing.
Yeah.
And how many books have you read about trading?
Oh, that I read a lot. I think I read a lot.
I've read probably over 100 books on trading, technical, fundamental, sentiment. I've read everything, sure. You know, and I've attended thousands of workshops, you know, for the last almost 15 years. I've dealt with some of the so-called greatest traders. I've signed up with a lot of newsletters. I've seen people recommending trades. When I look at the chart, it's garbage, okay? I've talked to all these so-called good traders. But the thing is, you as an individual, you have to know yourself. Yeah. And you have to learn. You know, once you know yourself, you can incorporate all these things. Technical, you know, machine learning. I know all these things. You can incorporate them. But at the end of the day, it's up to you. You as an individual, what kind of knowledge and training you bring to the table. That's what is going to make you money. Some people spend so much. That's why they say there is, you know, paralysis analysis, whatever they say, isn't it? Yeah. You know, some people, they spend so much money, so much time, they can't even put a trade, I mean, a trigger. They can't even make a trade. I started making trades before I knew how, you know, to read the charts, you know, and that's how you learn, you know.
Sure, I think you have a valid point. What I said was what I learned after hearing or listening to some other folks who are doing it and doing it amazingly well. And then, for example, I learned a lot from Brian, and then Brian is awfully humble. He's really a humble individual, yeah. But I truly believe and then yourself as well. What I do is I listen to people and try to learn their experience, because that's where you can, like, I can go through so many reading or theory, things like that. But the other thing I do is I try to grasp the opinion or things that other folks are saying.
Well, no, that's important. Of course.
So what I shared was what I basically grasped for the opinion of other folks, and it might be wrong. You're correct.
There's nothing wrong or right. It's just a question of you know, perspective. But what you're saying is, that's why I like to attend Brian's you know, meetups all the time, because, you know, I learn a lot.
It was what I said, it was just a perspective of, I just gathered a few perspectives from other folks, and a few of them are successful. Some of them they fail and things like that. And then based on what I gathered, it just come to one thing, and that is the strategy. So
I think
good trader is a good strategy hunter.
Yeah. But the thing is, trading is a very difficult game.
Yeah.
That's for sure. And you cannot be consistently be profitable.
That I cannot be more agree. And then that's where it comes to the point that if somebody lands on a profitable strategy for a week or two or three, it's just an opportunity to and then that's the difficulty about being a trader, is just to land on the next successful strategy. And yeah, for me it's a kind of, I just mentioned a few things that I said, because my perspective is different. I will not go to trading. I will not I would not leave my job to go to the trading unless I know that I can do well. And then one thing that I learned, that after all these, like if you was this $1 million question, can I do well, is just, can you hunt down good strategies? All those books are all this MACD and then 5-6 standard, Elliott pattern, ABC pattern, OR pattern, all this kind of things, chart patterns, things like that, will not lead to a successful trader.
No.
A successful trader will always, it can come up with a creative and brilliant idea of what do you call it, of finding strategies. And then those strategies are all innovative. So it's all about innovation. It's all about innovation.
No, you're right. But the thing is, nobody stays successful for a long time.
That's right.
It's up and down. That's what you have to understand. So, if you want to become a trader.
So again, the folks that I'm talking to, it's just one constant message that says, you will not be 100% profitable, but 6 out of your 10 trades should be profitable. If 5 out of 5 is profitable and then the other 5 is losing, means the strategy is gone. That is not a valid strategy anymore. Find another strategy. Your strategy that 6 months ago might have been profitable, right now it might be applicable right now. It depends on different situation in the market.
No, that's true. That's why you have to keep refining whatever you're doing, isn't it? Just like in a job.
Yeah, so I think we're agreeing in the kind of agreement that end of the day, just everybody like everybody are as good as their strategies. That is crucial.
That's true.
Yeah, but for you, Ali, it's important to understand when I pull up something like this, and this is why I use MACD, is you see these markers which are the same as your signals on the buy and entry. And most of the time when you see those visually, you think, oh, this looks good, this is a great strategy, I'll code it up and work with it and play with it on a coding level. But when it comes to what Boyd said, until you start playing with it and start putting in real trades, simulated trades, you start to realize what you're seeing visually is not the same of when you actually trade what you see visually. And that's what I think Boyd's also saying, is that what you see theoretically or visually in a chart does not reflect in actual real trading when you try to automate it or try to systemize it. Because
Can't agree more. But I want to just highlight one comment I had was this, like a MACD or different, this kind of things that we traditionally read in the books.
Yeah.
They usually are not like a typical strategies that make people very profitable. They're a typical strategy. Like a few case study that I studied, they have a lot more than like a 5 or 6, 10 standard patterns that we read in the books. So I'm just trying to add more color and emphasize to your comment that doing it is a lot is chorus, and it's very important. Doing something then reading it is, I can agree more. Yes, sure.
Yeah, and it's the same that could be said with backtesting as well. Because I got people that will backtest the hell out of certain strategies that they see and they code up, and they put it into a real simulated trading mode, and it fails a lot of the times. So that's where, boy, like it's like this. There's three ways you can be a trader. You can do it from a mathematical, from a computer science point of view, and from an actual trading point of view. Out of those three views, to be an automated trader, usually the one coming from with the trading background will be the best out there, no matter what. The mathematicians, the computer scientists will never beat the experience of a real trader to be successful. That's what I find.
Yeah, that's why long-term capital, they blew up their account, isn't it?
Yeah. Because they'll put in all this work in their back testing and it looks good, blah 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 blah, and then they put it into a real market simulation, and it fails. And usually that's why I'm using more MotiveWave as a trading platform, because when you do raw coding in something like Python or whatever it'll be as a computer language, it doesn't have the facilities that you get in a trading platform. So the only way to get around to see if a strategy will work or not is to backtest against as many instruments as possible, and you could trade it or simulate the backtest among, let's say, all your crypto coins in Tether, let's say 130. 99% of those coins will fail and show no profit over a certain period of time. But there could be one coin that could show a lot of profit from a historical point of view. And then does that mean the strategy, the code works or not? Is it successful? Will it succeed? Then you apply a walk forward test against the same code and the same instrument that showed profit on the back test. And then it shows it's looking good. The challenge there is the walk forward is based upon a historical performance. So it may not work as well. And this is the whole challenge of overall automated trading. And I deal with a lot of people, like I'd say hundreds, maybe thousands. And it's very hard for me to sit here and say, yes, you can find a successful trader all the time. I got one guy who's done very well, and he's in the same boat that I am. August was an amazing month. September comes around, and there's nothing but low volume. Does that mean his strategy no longer works? No, it just means that the market regime changes. And then the question becomes, well, what do you do about that, right? And as you said, you go out and you start looking for strategies, and that's fine. But the problem there is when you find a strategy that you think may work based upon the current market conditions, by the time you implement it, the market has changed again, which makes that strategy somewhat irrelevant because the market regime has changed again. And that's what I faced all the time for the last few number of years, because you get something that works, which I've had 3-4 times, but by the time you adjust and get a new strategy or tweak the strategy, the market changes again, and it could be low volume. It could be something that makes the asset class not worthy to trade with that particular strategy. And then you gotta go back to the drawing board and try to come up with a strategy that will work for that current regime. And once you come out with something that actually you're ready to implement that may work, the market regime changes and that strategy now becomes irrelevant. And that's one of the hardest challenges I'm finding right now. That's why I'm asking all these questions. You know what I'm saying? I'm not trying to be disrespectful. I'm just trying to say it's one thing to...
No, I appreciate that. Yet what you're saying makes sense. It's a challenge. Yes.
It's one thing to theoretically say that you have a profitable strategy, but when you put it into action, and it may work for a couple of weeks or a month or maybe 6 weeks, let's say, but the market condition changes because you got to deal with momentum, you have to deal with volume, you have to deal with liquidity, and sometimes the news, and sometimes trends of particular instruments that move. And I'm at a point where, like, what's the optimal way to do this without kind of like being like a cat chasing its tail, right? So sure. I'm not trying to put down people's thoughts, but it's always the trader who has that experience will become the most successful at trading, not the mathematician, not the computer science. That's what I'm finding now. But if you get a trader with those skills, have the 10, 20 years of experience, and at the same time that have the math and the computer science, yeah, they'll be damn good. And that's like a James Simmons or pretty close to it. You know what I mean?
True.
That's what I'm finding, and I'm not saying that to be discouraging whoever, but it's just, I got guys that are young and they live dreams and dollars in their eyes and whatnot, but when it comes to actually doing it, implementing it, it changes so fast by the time you actually implement something that can be successful, and then you have a situation where that strategy is no good anymore, or may not work at that time.
So what are your thoughts in terms of algorithmic or automated trading? Do you think it's a challenge, or are you leaning more toward manual trading?
No, what I'm trying to say here, from what I'm experiencing, there's nothing wrong with automated trading. I just think that it's a cross between 50% trading experience and 50%, call it computer science or programming background, right? So if you go out and you start building little trading scripts in Python, like what I have, that can use all the technical analysis, do exactly what you said earlier, to be able to look at 130 assets or instruments in 2 minutes and be able to assess and rank and be able to say, okay, at this point right now, this would be a good instrument to put money into. I just ran it in the last 2 minutes, and right now the one that says it is looking good, as an example, would be Maker. So if I go over to my chart here for crypto, and I bring in Maker, I can probably see what's going on with Maker on why it's going to move. And I can see it already. There's not a lot of volume there, but the question is Maker ready to move? And because I've got this script that I've written that's become very dependable, does that mean I can then just say, okay, I can now manually go out and put a trade on Maker, in the theory that this script has now run and told me Maker might be the best crypto coin out there in this time right now to trade, and manually set up a trade? I think that's where the cross between automation and human-based trading will work really well in something like crypto, and that's where it works really well. But to be able to say, I'm going to build an automated strategy and have it running 100% of the time and make money, I don't know if that's possible. And I should say it is very possible for a guy like me with, being an average Joe, call it. That's a pretty hard claim to put out there. I can sit here and say, yes, I've had a strategy I've developed that has done very well for a month. After that, it's not trading now because the volume's not there. And the reason for that strategy does not work anymore is because it depends a lot on trend. And there's not a lot of coins out there that have trend because the markets, or a lot of the coins have gone negative. So if there's not enough coins out there that have a positive trend, that strategy is no good. See what I'm saying?
True. And then that's consistent with all the messages I received, that there's no such thing as 100% winning strategy. That doesn't exist.
I don't think so. But I think if we shift our mind to work on tools that will help make calls for crypto coins or whatever instrument it is or whatever asset class it is, and more focus building tools that say, out of these particular instruments that I watch, these are the ones that look good based upon all these different types of technical analysis, fundamental analysis, and put it all in one little Python script, let's say, run it, and I'll spit out an answer saying these are the best, maybe 2-3 instruments, coins, or whatever to trade right now based upon all the assessment that we've run against out of the 130 that you've given us. I think that works. But when you to say I'm going to have a strategy, we'll go out, pick the best coins, then pick the best timing for the entry, boom, then the entry puts the position on, and then there's all these other new factors you got to work with, and it'll automatically pick the right exit. I think that's very difficult to do. Unless you're watching one instrument, like as you said, you were to watch the QQQ or sorry, Boyd, if you do it that way, yes, I think you can run a fully automated strategy, but we're going to work on one particular instrument.
I think that's what I was alluding to.
Yeah.
When I talked about more especially Forex, you have got 8, 10 major pairs. So you can determine which pairs based on the information you have is likely to move, then you can automate it.
Yeah.
You know, the same thing what you're talking about crypto, but to get a basket of currencies and then start automating things, you know, it may not be the best way to go around it, because
I think you'll end up banging your head more doing it that way, as opposed to develop tools that will help you look at a series of instruments, assets, however many they are, have it run over, I don't know, 2 minutes, however long it takes, spits out a response saying, this might be a good one to trade right now. And then you put on your trade manually with a stop loss and a take profit. I think that works.
Definitely that's the way I would go.
Yeah.
You know, because otherwise, I think that's why when you look at all these other, even long-term capital, because they were thinking that, you know, the interest rates, the spread is gonna at some point, you know, come together, but they didn't consider that Russia was gonna default or something like that.
Exactly.
You know, so those are things which a human being can only think about. The machine is not gonna think about. And by the time you realize, everything has gone asunder, and that's what happened. That's what happened even with all this, you know, that oil energy guy in you know, Manitoba. He lost 200 million, you know, because a human being is not having an input, and by the time they realize, it's too late. You know.
So that's what I'm trying to figure out, that somebody comes up with an idea and then he claims that this is a really good strategy. And then they put $200 million on that and then just go cold turkey to that market for $200 million to lose. Is that how but it's hard to believe someone has $200 million.
No, they don't do that. You know, I mean, like we are talking a good example, long-term capital. You had about 10 people with PhDs in economics, in that and that, and they analyze everything about the market, you know, and then they said, okay, we are going to bring, and most of the money is not their money anyway, you know, they have billions of dollars, and they say, we put up this trade, and once, you know, the spread diminishes, we're going to make so much money. But in the meantime, the spread is increasing because something has happened with Russia
that you never forecast.
You never forecast. You never knew about.
Your automation might not see that.
You see, the automation is not going to react to that.
Right.
You know, so that's what happens. So what Brian is talking about is something that you sort of have control over. You know. The inputs are predictable. You know exactly.
And that still is conflicting with my understanding of automation, because those automation, all of the positions are like a $5 or $6. Like you don't have like a $10,000 position. It's just $5 or $10. And then what it does is it measures itself, should it continue, with the performance of those $5 or $6 positions that they keep putting. Position, it depends on the asset class. And assumption of 200,000, putting $200,000 to an automation, that simply is not accurate. And then what's happening is you have like a 5,000 of those $6 or $7 trades, maybe in a period of certain time, and then you evaluate the approach or strategy. And then, by the way, you don't do like all the positions that I saw Brian had on the screen. They are not real. All paper money, like they're simulated. So there's a lot of simulation thing. It's mind-boggling that someone comes to me and says somebody is trying to do a 200, whatever, something like a large amount of money through just automation. That's just not how algorithmic trading is defined. It might be misunderstanding of what are we talking about.
But how do the high frequency traders do?
All the positions, they're very small positions, a lot high. That's something you cannot do. You cannot do like a 500 trades a day. They can.
No.
Right?
How many positions do they do?
A lot. So depends, institutional or individual.
Institutional.
Because those are $200,000 a day. I'm sorry, 200,000 trades a day. They are massively high, so big that it's beyond imagination. And then they are not going through and then the one in New York, they are not going through what do you call it? All the normal hops in the trading infrastructure. They are not going to interactive brokers or TD or things like that. They have their own platform, directly do their trades. And then they are saying this is a good thing because that's actually keep the market in balance. Because the minute you make a bad bet, that's a 60% of the whole trades in the market, in the stock market. Those robots are the one that bring you in and either make sure that you are doing a good bet or a bad bet. So I guess maybe it's not clarifying that what are we talking about? If you are talking about making something like a $5,000 position, I think there shouldn't be any automated trade in a position more than like a $50, $60, or something that covers your transaction cost, if I make any sense.
I think so.
Yeah.
I do know that with what Ali's saying regarding the institutional algorithmic trading, let's say namely the high frequency trading shops, they do a lot of what they call front running and spoofing to screw up the market, which is illegal. But there is some positive benefits that HFT shops provide. With what Ali's saying is that they provide liquidity. And if you have certain retail Joe Blow trader putting in a trade for whatever, and you have HFT shops trading that, usually that they'll go against you and bring the price back down to like where it reverts back to its mean. So that's what a lot of the big traders do. And as Ali says, that they make, that's how they make money, is that they can move. A lot of those shops can move markets, certain particular instruments.
So they're automated, isn't it?
It's all automated.
Yeah.
But the automation is not what you have in mind, boy.
No, I know. No. That's I know the automation they do.
Oh, but their automation is not like making positions above like a $5,000-$6,000. They are very small positions, but a lot. They can afford it.
Yeah, they are very small.
They don't go through the brokers. And then there's one more thing: the algorithm that an institutional HFT shop are using is different than something that a kind of retail one can use. Why? Because they have different platforms, and also if they make less than $1 million a day, probably it wouldn't pay their monthly electricity bill. So they have to make a lot. Whereas, for example, if one of us, we make maybe $40,000 a month, I'm just throwing a number.
Yeah.
A fraction of their profit, still it would be good lifestyle for us. So the strategy, the constraint, the limitation, the pressure that they are under is totally different than the pressure that a retail trader is under.
Of course. I mean, because most of the money is borrowed money. That's what we are saying. They are using other people's money, so they have to make money.
And then, no, I'm just sharing my study with you. Not that I'm not as experienced as you folks are. And
I'm not
experienced.
I'm just.
The strategies that they use, or the trades, or the machines, or the bots that they are using, are totally different strategies. You cannot use those strategies in a kind of retail kind of shops.
No, absolutely not. I mean,
and vice versa.
Yep.
So it's totally different ball game.
Yeah,
between the two.
But you also have to remember where those shops are trading. As Ali says, they're not trading through a broker. They're trading right on the exchanges.
Yeah, exactly.
And then it might scare you away that, oh my God, they have everything that I don't have. But there's one more big difference. If they make less than $1 million a day, they go bankrupt. That's one more thing, their platform. Whereas if one of us make like a few $1,000s a day, still it's a lifestyle. That's the big difference between the two. So if you want to become so it's all about, what I'm saying is, if somebody wants to become a retail trader, the only disadvantage a retail trader has, as far as when you learn everything, is just the psychology. Because the retail trader always loses to the psychology. They always have a kind of subjective interpretation of what happens in the market, whereas the institutional, there's no subjective. The minute they make a bad psychology move, they are gone. Like they are gone means like a first warning, the second warning, the third warning, they're gone. They will not survive, especially when they're new. And then they always every morning they have these trade sheets. They hand it to them, and then they are going to work based on that. And then the regulation that apply to those is scary to imagine. There's a lot of regulation applies to them. It's their job is not as simple as they go. They go beyond interactive broker. They have access to everything.
Yeah.
But the regulations that they have to go through, the cost and expense that they have to go through, is beyond imagination of like someone like myself, that I'm just such a small player. So it's
that's why they have a lot of money. They can hire the lawyers to do, to look after them, isn't it?
Because I have a few questions. I was wondering if we can kind of things. The most critical one is the new signal. And then Brian just pointed me to IQ feed, and it was jaw-dropping because, like, one of the news sources is benzodiene, what do you call it, Brian? Benzinda. And then that is like a $200 a month service. How IQ feed? I'm not complaining. I'm just wondering how does it happen that IQ
I don't know.
feed
They probably sign up as a partner. I don't know the arrangement, but my view of it is, as you said, just take it, don't question it. It's like it's like finding $50 on the ground. And you just take it.
Just take it. Yeah,
you just take it.
That's amazing. It says, and then also they combine a few together. Like, wow.
Yeah, they'll have other data sources as well. So that will help you for sure.
And then, Brian, how do you compare this MotiveWave with TradingView? In terms of...
it's like comparing a Volkswagen against a Cadillac or a Rolls-Royce.
Sure. Which one is Cadillac? MotiveWave is the Cadillac?
Yeah, ask Boyd. He'll tell you his opinion. He's a MotiveWave guy. You want to explain how you...
Okay, so MotiveWave is far better, right?
Yes.
Okay, longer story short.
Yeah.
I got my answer because I was wondering, because people are saying a lot of things about TradingView, but sounds like MotiveWave is superior platform.
Well, yeah, but the problem with TradingView, it's PineScript. And how many people do you know that use PineScript?
Not so many.
That's my point.
I don't know. You folks know better than I don't know PineScript.
What's
your view of MotiveWave, Boyd?
Oh, it's powerful as far as I'm concerned. There's a lot of features that the only thing is you have to learn how to use it. That's all. True.
And then this MotiveWave, when you have your own strategies scripted here, what kind of application is that?
Java.
Is a Java application that can run and do things like that?
It's a Java SDK.
SDK that you do.
Yeah.
And when you pay, like, let's say that $500 license, I think it's limited to, you can install as much as you want, machines you want, but I think one of them can only run, right?
Yeah, you can have as many sessions running of MotiveWave on one system with one license.
Mm-hmm.
But can you run another session on another machine with the same license? The answer is no. So what you do is, because it's Java, and it's been around for decades, Java that is, just get a system with a lot of RAM, and you can run as many MotiveWave sessions as you want on that system.
I see. And then, so that, I think you answered me in one of the chat windows, but just to confirm my understanding that it sounds like your MotiveWave machine with the whatever license you have is producing a certain signals, and then it adds it to your your cache or whatever storage, like Redis in your case, and then your Python will basically the integration bridge between the two is Python is the actual platform that reads those signal from your Redis cache and then execute the orders. Is that correct assumption?
Yeah, you can do that where right now with MotiveWave you are limited only with the spot market in MotiveWave, and when you brought up the futures market and the buy and sell order 2, level 2, like looking at the futures market, these are the instruments that you can trade with the futures market on Binance. So technically what you could do is get all your information from Python, and you can have MotiveWave in the strategy code that you write be able to read through a database or a flat file to get all, let's say, your futures information from. Does that make sense?
Okay. So it's a kind of, if we want to go through a data flow, there's a separate Python program to produce all this CSV file or database.
Yeah, you'd have to build that on your own until MotiveWave comes out and says, yes, we now support Binance futures and Binance options.
And then MotiveWave reads that and then come up with those buy or sell signals. And then you get those buy or sell signals added to your Redis cache, and then Python program reads those and then execute the orders. Is that fair statement?
It's the other way around, where you have MotiveWave, your strategy code, read and access your Binance futures data through the Python, and then have the Python access through the Binance API all the futures information, pushes it back into Redis, and then your Java strategy and MotiveWave will be able to access that information.
Mm-hmm.
Make sense?
Okay, sure. So who actually executes that, puts a buy order? MotiveWave?
Yeah. You would build that in your code of the strategy and the MotiveWave strategy.
And then that would be the buy. Okay.
Yeah, so you would have MotiveWave, your strategy code, access a database, and then in the database there would be your information be pushed into with all the, let's say in your case, the finance futures information in the database that the strategy code and MotiveWave would access and make a trading decision based on that.
Mm-hmm.
Does that make sense?
Yes, makes perfect sense, sir.
Yeah. Because right now, until MotiveWave supports MotiveWave supports Binance futures, then that's the only solution I can offer from a coding perspective.
Mm-hmm.
So that it's a question I'd like to know if there's a timeline when MotiveWave will support Binance futures, because then you don't need a database, you don't need to go through the Python to get access to that info. Because if at some point in the future that Binance will support Binance futures, because as I said, they only support right now Binance the spot market.
Makes sense.
Because right now on Binance, you don't have access to the options market in Binance. It does exist, but it's only available on their mobile applications. And I think it's only available through the, I'm not sure if the native the native Windows app gives, I think it does. The MotiveWave platform, let me start again. The Binance platform will most likely give you access to the Binance options market as well. I think it does.
I see.
So Ali, what's your plan? Your plan is to be.
I think with what Ali has mentioned about the order book, I have to look at the order book if like what's available in the spot market for Binance and MotiveWave.
Yes, so I'm just sharing what I heard, folks. I'm not
You're
expert as what I heard, and hopefully you might say, okay, Ali, doesn't make sense. Or let me share. these are all the experiences that are coming from, let's say, a MetaTrader folks, right?
Yeah.
And the idea, the first thing is your strategy should take a look at the order book, and then if it is Forex, you cannot possibly, unless you have one of those $1 million servers, you cannot process it. The MetaTrader gives you an indicator that you know that when you are entering the position, that one. In crypto, that's piece of cake. The getting an order, if there's just one GET call, you make it to Binance API, you can get the whole order book for any currency pair. So that is not a problem. The other one is the news. And then I feel like what I say about the news is not well received in the call. And then I need to go back and then say why. But you folks, it sounds like news is not your number one winning factor. Is that the case? Is that what I hear from you and Boyd and Brian?
It depends upon the asset class. Crypto, there really is no news because you're just you're just basing it on price only or the bid and ask at the level 2. That's all you have.
I think for me, when I talk about the stock market, for example, when I do my research, the news come into play when I'm, watching my position. If I have to exit my position or not, depending on the news, I can consider the news. If I'm in the money and the news is likely to be unfavorable, I might exit my position. The other thing is there's so many different types of news. There is, like in the stock market, there is earnings, for example. There is dividend. There is so many different types of news. Which news do you consider to be critical at any point in time? So you cannot just access one type of news. You have to consider so many different types of news depending on whether you're entering the position or you're exiting the position. So
the ones that I know that one of those strategies that is currently making money, and then this resource is the one that actually I trust he's making money out of Forex. He's very unique, has a unique strategy. Is based on one indicator in MetaTrader that for any currency pair, it gives you a negative or positive number about the sentiment of the market about that. So when you actually decide to make a position, you know that this is probably this pair, the direction they go to the pair is a hard to climb. If you think it's going to climb, it might climb actually, but there are so many negative things about it that you should take it into consideration to decide whether you put into the long of it. Whereas
absolutely, I mean that's so to do with when you are researching.
But the way that you are saying, Boyd, so that's the difference between my perspective and the perspective that you have. And I think you have more experience, but you actually read a lot of news and you interpret them, like 10, 20, 50 of them.
Whereas, no, but the major news, there are things which are important. For example, if I know that I'm entering a position and tomorrow they are going to announce a major event.
So let's not mix it. Let's not mix it. I think when there is a piece of information, we shouldn't mix it. If there is a news coming tomorrow, that is not the context of this conversation. We are not in a kind of sixth sense or predict what's coming tomorrow. But there are certain news that happened 2 days ago, and that news put a shadow over your thing. For example, if there is a news that the oil, it's somehow for example, the oil price is coming up, means there is there's a boost to our Canadian currency. So whatever your currency pair is, if you are longing based on the fact that Canadian currency going up, then that also should be into the take of a consideration. Now, there's another misunderstanding. I'm not saying you just make a $5 million trade based on that information. You combine it with 6 or 20, 30 different. So what is this? What machine can do and then human cannot do is machine can incorporate 50 of these numbers to make a call, to make a recommendation that you do it or not. Whereas humans, they just have to read it and use human intuition to do it. because the way that you play chess, Boyd, you gotta consider the way that the machine play chess with you is different than the way a human play chess. Human plays chess the way that you play. The machine reads 5 million different moves and then ranks them and then find the best move and then comes to you. So that's the difference between, because it was one of the things I had to build, and that's how exactly the difference. What I'm saying is also the interpretation of the news. You read the text and you know what's happening. You read the kind of let's say CNN.com, and then you know what's happening, or you know right now the whole planet is in COVID. But machine, your chart analysis doesn't know about the COVID. So that kind of sentiment is missing from machine's decision, which should not be. But do you need it? No, because you already know there's a COVID situation. So you are betting on a country that has a lot of COVID problem, or a currency that has a lot of COVID problem. It probably is not a good idea, right? And then COVID is it's something that applies to countries, but in terms of the currency, for example, Brian, if there was a news, if there was a news, and then the news is what's the company that they went down? What was the company name again? BitMax, right?
Okay.
Yeah.
So when the minute, and then the earlier you know BitMax, you should exit all of your positions. And then that is a lot of people didn't do, because they had to wait. They were sleeping, and then day morning comes. Okay, there's a problem with me. You log into MetaTrade. I'm sorry, to your Binance account and say, okay, everything went down. Like you lost a lot of money.
So you're talking about black swans, basically.
I have to. So I don't know what's the term, but the minute that news is coming,
because those are events which, you don't know they're gonna happen.
Yeah, exogenous factors.
Yeah.
Oh, okay. No. So again, let's just not to mix things together. When that happened, the millisecond it happened, because when you do the candlestick, you see the candles going down, down, down. In 3 hours, it goes a lot down.
Yeah.
And that's the 3 hours you might be sleeping. Whereas the minute that news comes in, there should be a mechanism, or that 3 hours, maybe you're in lunchtime, you come back. At least you should wake up or drop your spoon or put the donut down, go back, take a look. There's a horrible thing happened there. That's the news.
Yeah.
If you don't want to make it automated, and if you don't do it and then wait tomorrow afternoon, you read the Toronto Star, okay, there's something happened. You log into your trading station or whatever trading platform you have, you see the
black swan you're basically talking about is an event that is unlikely to happen. You didn't consider it, but it happens.
Now, what the service I'm trying to find is, so because this service I know exists in MetaTrader, I know good strategies are based on that. The same thing should also be available. I know that the cryptocurrency world are not very much into the news, but there is a few things that it might be applicable.
So it's like, it's like Google Alert, for example.
Google Alert, but is when you get the Google Alert, it's a 5 minute. You should get it in millisecond.
Okay, but I'm saying that's similar to what you're talking about, isn't it?
That's the difference between a free included Benzodine service and $100 a month.
No, I know, I understand what you're saying, but it's a similar thing, isn't it? It's to alert you to an event which you cannot easily access yourself. Google Alert also is something that
fast enough.
It's fast enough.
Fast enough.
Yeah.
That's the first thing. The second one is machine understandable.
Yeah.
Means the service I'm looking for, I don't want to spend, if I want to build this in 2 months, I would kill it. That's what I do for a living. I'm good at that one. It gives, but I want the same thing that all the MetaTrader folks, they have it. They just get one.
Ask the guy who told you, maybe he has, I don't know.
No. So what I'm saying is, all I'm trying to say is there's something in MetaTrader available. All I'm saying is, I hope I can get the same thing for a stock and in crypto. If you come across something like that, let's each other know.
But Ali, those are, you can still make money. No, I'm not against that. I'm not, but you can still make money without, thinking in extremes, you see? You can still make money.
I agree. People are making money with this, but I think there are two important factors that are not into vantage point of many of traders. News, the way that I say, not the news that you might think like a predicting future things like news, the systemic way of action, come up with action based on news. That's the first thing, and then properly assess the order book. These two, I can see that is not, because these two are producing phenomenal strategies, profitable strategies, which we keep downplaying. Like Boyd.
No,
honestly,
no.
Keep downplaying. The thing is,
I'm not downplaying. No. I'm not downplaying.
I want to connect this to one more thing, Boyd. I said, remember, everybody knows all this MACD and then harmonical and all those ABCD, Elliott, Ichimoto. Everybody knows that, right? And they're applying it.
Yeah, but it's also called self-fulfilling. There is what is called self-fulfilling, isn't it? You know what it is. Self-fulfilling. It means if everybody is doing it, it becomes real, isn't it?
Everybody are doing it.
Yeah, they're
means
following it.
Your trade.
Yeah, if everybody is following it, then it becomes real. It depends how you can, take advantage of it. That's all.
Okay, let me do one more step at it. I think the people who are actually doing it, they are having a better innovative strategies. That I know.
Well,
plus a lot more that I don't know. A lot more. Like there's another strategy called market making. They mix it with some kind of correlation with ETFs, and it was amazing. That just one shot of what was in his mind, and then there's a time series going on and a lot of things going on. But all this combination, that strategy was not a joke. I'm not a trader, but that strategy was not a joke, and it was someone's degree for financial engineering and a master's degree that he was working on it, and it was not the joke. So I'm not a trader and don't know a lot of finance enough, but I just see other people are doing certain things that their strategies are not cookie cutter Ichimoto Elliott way.
Yeah, but
that's
there's a strategy. You remember Brian, that guy who made there? How much was that strategy made on Binance? You remember?
Oh, there's a ton of them. Like there's many that can make literally millions. Yeah. It depends. Yeah. Are you referring to the one guy who was trading between all the stable coins?
Yeah, exactly.
Yeah, he put in 15 grand and he walked away with about $35,000-$40,000, and
yeah, within no time. Yeah. So
lucky strategies are different than the strategies that are. Listen, folks, I'm just explaining what I heard. I don't want to.
No. It's good. It's good to have a discussion.
To be honest, why I'm saying all this is to share this. Maybe in next year, same time, we get together and have a conversation. Maybe, for example, Brian Boyd said, "Oh, by the way, remember we were talking about the news? Here's the tease." And then this kind of thing. So
it's always good. Knowledge is
maybe after 1 year said, you remember you were talking about the news? There's a article that says never trade based on the news. Maybe you come up with that. It just doesn't hurt to share this kind of things,
absolutely. No, absolutely. But at the end of the day, don't get too much information. It's just gonna paralyze you instead of concentrating on making money. That's what I mean.
True. Analysis paralysis.
True. Analysis by paralysis.
By paralysis, yeah.
Because you can join so many newsletters at one point, at so many newsletters, and they're just confusing me,
True.
But now I'm focusing because that's why I just like to listen to Brian, because I know I don't have to get all over the place.
No, to be honest, I didn't know how to explore cryptocurrency, but based on Brian and everything, all the things, now I'm going crazy with it. Not to do it but it's just like very MotiveWave, things like that. So to be honest, everything I go toward is something that Brian probably had a session or one comment or one video 2 years ago.
I don't say things to discourage people. I'm just trying to set the reality, like, why go down something that will eventually lead you to what I already kind of experienced?
Yeah.
And then one reason that I'm bringing to these kind of sessions is to have expert thought on it.
Right, and that's what we do.
No, it's good. It's good.
It's very good. Yeah, but I just wanted to show you with this little script I got, we'll call it a tool, like 20 minutes ago when I said this maker, it was around 585 and now it's pushing, you know, not much, 592. So it's made about 1% already. And I just did another one here on.
Hey, Brian, this is amazing chart. Like, so your script captures this?
Well,
the one the previous one was magnificent. I was falling off chair.
Right here. But this one I just ran,
My God.
585, and this has come off. But these two moves here are about 1%, and I just ran this one, and it's a 135, and it's already moved 137. So this red bar may eventually go green.
Brian, quick question: the one before 16, between 14 and 16.
This one right here?
No, before that, yeah.
On the other chart, you changing what was the other chart like 2 seconds ago?
This one?
This one. This is the one. Does your script captures between 14 and 16?
No, it won't catch. If you're referring to these moves, if it catches it, it'll be lucky. But it will catch reversals by the looks of it.
Mm-hmm.
And it just uses trend, and it measures the trend on the average of where the price is already, and it will calculate where like all out of the 130 pairs out there in USDT, the high idea by this particular script that I've got, it will measure out of all 136 pairs, which at this point will have the highest chance of actually either reversing or starting to profit. So
and you do that by MACD?
No, it's just using trend, simple trend.
Simple trend, sure.
Just trend, that's it. And it's using ROC, rate of change as well. So this one is picking up these last 10, 20 minutes, these two bars. And right now, if I was to watch this one right here, this third bar here, if that goes green and it continues to go green, then that means, I mean, you can already see right here that the volume's starting to pick up. So if that turns green, what I'm saying is if you have little tools like this that can catch these kind of up moves and it works, that's all you need.
So basically what you can do is you can just enter that trade and on resistance exit.
Yeah, I could put a manual trade here. Let's just pretend or even better here, what we talked about in the past, something like an alert, and put in a trade. I don't know what's going on in my system here. Oh yeah, here we go. So I can put my trade in here, and I can put in here manually. Remember I said about trail stops in the last few weeks?
Yeah.
This is the only place I know where you can apply a trail stop. So I can apply my stop loss at the 1%, and then apply the trail stop to let it go run if it does become profitable, and it won't kick me out of the trade when I don't have to put in a take profit. I just put in a trail instead.
Yeah.
So that's something I'd probably look at doing to make this whole trading process more effective, instead of killing your busting your brain trying to figure out this machine learning and all this stuff, right?
Yeah, but for me, I like to do things. I like to enter things manually. I like to see.
I think that's the best way. You have a tool that says that this looks like it's going to reverse or it's starting to move up when you look at the trend and the timing of that trend as it moves up, approaching trend. And the traditional and most effective way for an entry is when a price moves just crossing over that trend.
Yeah.
So
no, that's the way I like to trade, and then I just look at the resistance and I put in exit, and that's it.
Yeah, and I really think that's the best approach. So if I'm sure I've shown this before, but if I have my extended trend here, and I did something like, if I did something like this, or maybe here, once that price crosses over that trend, then I know I can do an alert based on that.
Yeah.
Okay, based upon that trend. Oh, hang on here. I'm getting these two sessions confused, jumping between my Oanda and Binance. But if I do this little guy here, just as a simple, effective way of setting something up manually, right? So I create an alert, set a trade, and then put a trade in based upon a condition where I can set that on, like the condition the price crosses my trend or my indicator.
Yeah.
Price crosses the trend line or wherever that trend line is, and then put the trade in, and then I can apply my trail stop just by using an alert and doing something like that within MotiveWave. And that's the best way to trade, I'm starting to think.
Oh yeah, it's good that MotiveWave has got trail stop. It's like most of the Forex platforms. That's the beauty, yeah.
Yeah, that's what I would do moving forward. That's what I'm thinking of doing. Because I really struggle, I'm going to be honest, I really struggle trying to find a strategy from end to end that will actually get the correct entry and then do the exact exit. If I was to show you the trading history, it's mostly losses versus wins.
And then what are the size of positions that usually you do?
It depends upon, I would just use the beginning, a simple one lot. And then,
one lot means one pip?
It depends upon what, in my case, I like as I'm testing everything,
sure,
and trying to find a really good workflow that works for me. I obviously want to do it with minimal impact on my account. So I would put in the minimal trade amount that I can start with. And if I'm doing it in Tether or USDT, that's the equivalent of minimum $10, no more. Okay. And once I get comfortable and I feel that this kind of workflow works for me, then I'll scale up the each position. But until then, I'm just going in with minimal trades at $10.
$10, yeah.
That's what I do live trading. The struggle is trying to find a workflow or a strategy that actually works consistently and finding a tool that actually works. That's the struggle. But the way I'm looking at things, I would probably say develop a tool that will get you the right instrument, get the timing right for the entry, and then just manually put the trade in. Like I'm showing you, like do an alert with this trend thing, and then once it crosses that trend, then it'll do the entry, and then within the alert itself, all you got to do is apply your stop loss and trailing stop, and you're safe.
Yeah.
Yeah, that's the only way to do it. From what I see, there's no magic. I mean, unless you're a super mathematician and can consistently, I should say a magician, consistently get profit with one strategy on all time.
A magician.
Yeah. I mean, great, do it. But the odds of finding that is and if you do find it, as I said, the market regime will change where that thing will no longer be relevant anymore.
Yeah, because to me, what I've seen is that whenever I trade, I make some mistakes. The only thing is to evaluate and troubleshoot whatever trade I did, where I made the mistake and what could have happened that impacted the trade. I think most of the time the strategy may not be that, may not change that much. It's just the conditions that change.
That's what I'm saying. The market, the overall market regime changes.
Exactly. So that's what I've experienced so far, because most of the time when I go back and see why the trade didn't make money, then I find I didn't consider this, I didn't consider that, because maybe I overlooked it or because the market was ahead of me.
Right. Yeah.
So.
And that's the problem I find, Ali, when you look at all these books and talk to people and join all these workshops or whatever. Chances are it may work for them, fine, but when they teach it and transition that same knowledge and information to average Joe, it's not going to work. And the only way to really figure it out is by figuring something out yourself that works and implement it and test it. Because theoretically, looking at things visually or theoretically thinking about something, usually it's not going to work. And that's what I've experienced for the last number of years.
No, that's a fact, because we are all different individuals. We have different risk
tolerance,
tolerance and stuff like that.
Yeah.
For me, when I started trading, I didn't want to use what they call an account without money. I just started trading because that's the only way I was going to have my feet wet properly. But some people want to practice before they put money on the line. That's good too, but sometimes it takes too long for you to figure out things.
Yeah. Because
when you don't have money on the line, you have no motivation to find out what you did wrong. It's very difficult for you to go back and say, "Oh, why did I lose on this trade?" But when you are losing money, most of the time, you'll be motivated because you're losing money.
Yeah.
You want to find out why you're making mistakes.
Yeah.
And that's how you become more experienced, And that's why very few people stay long in trading,
right?
Because
exactly.
their expectations are different, They think it's a casino,
No, you have to find a system that works for you.
Yeah.
And develop something simple, like a tool that says this is the time to trade this particular instrument or whatever you're looking for. Because if you're looking for an end-to-end solution, especially with machine learning, I think it's next to impossible for average Joe to figure it out. I really do.
Because those guys like that Renaissance,
James Simmons.
They have got about 1,000 programmers, maybe.
Yeah. And not just that, but that you have to factor in the level of intelligence. Like I've dealt with very highly intelligent people.
Exactly.
And I could never ever see myself have that sort of aptitude that they have. They just see things differently. They analyze it differently.
Absolutely,
and you cannot, as an average Joe, can never imitate that. That's just how they are. It's like saying a fat person and complain they can't get dates, but there's other people that are born like Pamela Anderson or whatever, and they get, that's just the genetics that they have, right?
Exactly.
It's hard to imitate that. So
it's like everything. Some people just it's like oil from Saudi Arabia and oil from Canada. It takes a lot to bring up oil in Canada. Then Saudi Arabia, you just dig a few inches, it's there, isn't it? That's how it is. Everything is, depends on your advantages and your genes, what you are born with, how lucky you are, with certain traits, So, but for me, what I've experienced is an average human being can still make it in the market if they work hard enough, That's what I've seen. But just people give up.
Yeah, it's hard for me, and I can live and say I've been caught up in the analysis paralysis as well, and as Boyd said, that you gotta put some live, like some cash in, and really feel it. And the other thing is, I know a lot of people will go out and get 6 computer screens on one, and they think they're automatically geniuses. That doesn't work.
Yeah, that's one.
You know what I mean? Or I've got people that will just save up 10 grand, and they'll just throw 10 grand in the market, not know why they're losing money when they do trade, because they don't have any system to it.
Yeah.
And that's why I always tell people, if you're going to put live money in, that's fine, but just put the minimal amount that you need to put in. When you're starting out, you just start out and just want to start out to get consistent wins. Once you get consistent wins, no matter what the market condition is, and you can get consistent wins, then you can start to scale up your position sizes.
Exactly. That's why for me, like I like options because I don't have to put up a lot of money. You know, I can put up $200. I can have a few contracts, and I'm learning along the way. You know,
Yeah.
whereas with some other markets, you need a lot of money and you have to borrow. I know some of my friends before I started trading, they used to talk about margin calls. I was wondering, I had no clue. What is a margin call? The guy is losing money, you know, because he's borrowing money to buy stocks, or he's shorting. I didn't know that. And then he says, have a margin call. It means you have to put up more money. You see? I didn't know that. You know, until when I started trading, I said, oh, what is this? You know?
But
it means you know.
Go ahead, continue, Boyd. Sorry.
I'm saying it means, you know, you don't know what you're doing because constantly you're losing money and you have to put up more money to cover your positions, isn't it?
Yeah, it's like having a wife that has a credit card of yours and goes out and spends money. They have a credit limit of 1,000. She racks it up to 1,000, goes back to say, hey, can you give me more credit? And then they get 2,000. They keep doing the same thing. They're not learning.
Exactly. So, you know, the market is, you know, for me, the market is available to everybody. It's just that people sometimes lack of proper knowledge, sometimes listening to, you know, wrong sources, but, you know, you can find your way in the market. It might take a long time, depending, but somehow you can find something that can give you.
It's like right here, I'm just watching this thing, right? Like I knew BNT was going to move. And now look what's happened. It's now crossed that trend line, which means I would have an entry. I would have applied the stop loss. I would have applied the trail stop, and I just sit back and relax and wait for the next position, because now it's already got everything. It's got the stop loss, it's got the trail stop, and it will automatically get me out of the trade. But if I try to build a strategy around this, good luck. That's how I'm looking at this now.
Yeah, because trading is all about, the thing about trading, you have to be in the market. And for you to be in the market, you don't have to lose a lot of money.
No.
Because once you lose money, you're not going to be in the market. And you won't have a chance to learn how to make money.
Yeah.
That's the problem.
Yeah.
So once you're doing that, like you put a stop loss, means you're minimizing how much you're going to lose.
Right.
So that you can trade tomorrow again or the other day, you know. But if you blow up your account, you're not going to learn. You're not going to get to the promised land.
And the other thing is, when you mention about the bid and ask, I don't need to worry about the bid and ask in the order book, because it's already built into what I'm watching right now on the order book or on the price itself. Right? So if I know it's crossed that trend line, I don't care about the bid and ask, as long as it crosses the trend line and it automatically puts that position on for me with the stop loss and the trail stop. After this, I don't know what it's going to do, but you know, I can move on to the next position now. And that's all done as a human.
Exactly.
Right? But can it be done as an automated way? Maybe. But whenever, from my experience, honestly, it never works out. But here, I have a little more control as a human. But I'm using a tool that I've written that tells me what instruments are ready to move. And right now, the BNT is moving, and I could put a simple trend here and do the same thing. And if it moves, and put on the position. And after that, it does its thing.
I see. So that level 2 order book is not, you don't see it as important as it might be.
It's important, but it's built into what I've already doing right now. Because if the price, the bid and ask, and doing its thing, out of those two combinations of the bid and ask, it's going to drive up the price. All I care as a trader, all I really care is, long as it crosses over that trend line, then it makes an entry. And if the bid and ask ain't doing anything, who cares? The entry will never happen. So I don't have to sit there and blow my brain on and trying to figure out what's the bid and ask doing. As long as it crosses that trend, that's all I care about.
Just to make sure I understand. So if there is like so many, like 6 or 8 different orders that They're trying to buy things that like a 2 cents or 5 cents less than what is the price right now. So those items in the pipeline, those bids in the pipeline would not impact your decision?
No, because all I care about is that the price eventually moves above the trend line that I just drawn, right? And I can automate it where if once the price crosses above the trend line, it'll automatically put the order in for me, and at the same time it will apply the trail stop and the stop loss for me, all automatically. The only thing I need to worry about is what's going to move, right?
That move, it would not, and so you think that order book would not have any impact on the move? Because
will.
You have an order
Yeah,
book.
yeah,
There
yeah.
are more than 60 orders in the pipeline, buy or sell. So those will not impact the move of the
what
price?
I'm saying is it will impact it, but at the end of the day, for me as a manual trader right now, I don't care as long as it crosses the trend line. And if it doesn't cross the trend line, there's no trade. There's no entry. So I don't really need to sit there and watch the bid and ask. I just got another one called Storage A. So let me look at Storage A.
Yeah, because what it means is they are more buyers than sellers eventually.
Yeah.
You get filled, that's all.
Yeah. And
You
all I care about as a trader that it crosses the trend, and I'll automatically put the entry in. I don't need to look at the bid and ask.
Mm-hmm.
I don't
What
see
is
it.
a Storage A?
Storage A is another coin.
Okay.
So it's another coin. And the question is, I need to see, will it move up? And it may not. But I'm just trying to give you examples of a combination to trade as, like, to use automation for your advantage, but at the same time to simplify when you do put on positions and trying to do it in a much more simplistic way instead of making it more complicated by watching the bid and ask. I'm not saying it's not important. It is important. But at the end of the day, I don't really care what it does as long as it crosses, let's say, if I decide to use the trend line, all I care as long as it crosses the trend line. It's like a car. Most people don't care about how the engine works. They don't care about how the wheels work. All they care is they want to go from point A to point B. That's it. That's all they care about. And a trader's the same way. Mm-hmm. So I don't see why I would need to be honest, to go out and start complicating my life by learning machine learning and bid-ask spreads. Because I've done that for a long time. I'm going to be honest. I'm like Boyd. I just want to go out there and learn about trading, keep it simple. Yeah, have some simple tools that will tell me when the price will move, and use those simple tools, and then figure out what simple, in this case, a component, a trend, and then have a workflow around that to be able to make an entry or not. So this is a simple example of doing that without overcomplicating my life by doing all this extra analysis paralysis stuff. You understand what I'm saying?
Yeah, I understand. Yes.
Because it's like I could spend, in reality, I've spent 10 years what I call screwing the pooch and not trading, because I'm like, oh, well, I need to learn this and I need to learn that and I got to do, all the math, you know what I mean? It's not very effective. And you eventually just kind of like spin your wheels and go nowhere. And this way, I could still put a trend on here, and if the price gets driven down, then I know that trade will never happen. Right?
Yeah, yes.
But here we are. The entry would happen, but where the price goes, I don't know. But I'm just trying to, it's really all about workflow and what workflow you come up with to make a trade. And the timing of it, of the entry and the exit. But to go out there and code it up and end to end, it's tough. It's very hard. Not going to lie. But this way, it's much simpler. Yeah,
keep it simple. Simplicity wins.
I tell you, the successful traders like the 8-9 digit guys that I've talked to, that's what they tell me. Keep it simple. Don't overcomplicate it, because if you overcomplicate it, overanalyze it, you're eventually not going to go anywhere. And right now, what I'm seeing is that even though there's not a lot of volume on this thing, it's starting to show some profit potential here, this thing. You know what I mean?
Yes.
And look, here's this latest storage A, but the BNT is looking good. And it may move just like this. But I'm in the early stages. Like if you look at the volume here, we could be in early stages of this run up, of this huge run up. And the other factor you got to factor in is luck. You know what I mean? This may get lucky and actually move up a lot, and most of the time it won't. But that seems to be the only way to be able to build a workflow instead of coding up these strategies. You spend a lot of time at it. A lot of the time kind of gets wasted, and when you do come up with something, usually it goes nowhere because you've missed the opportunity when you had the trading idea. And that's what I found over the last 2 years in crypto. Make sense?
Yes, it does. It does.
Because I don't know what more to tell you. Because, I mean, Boyd's been on this for a couple of months, I guess, and he's seen me go back and forth on things. But at the end of the day, I really think that this is probably the best way to go about it. Instead of blowing your brains out trying to come up with a coded up strategy with an automatic entry and exit. Because as a human, we have to watch this thing in real time to make sure it continues. Because right now, I could have a position on right now, and that could just drop suddenly. And if I don't apply that stop loss, I'm in trouble.
True.
You know?
Yeah, I mean, the context of the conversation was you were saying that your robot needs to have exit the start. I said maybe this is one input to the robot.
Right.
But that was the context that you were asserting that it's a robot that does this, and then a robot you were looking for options to make an automated exit without losing.
Right.
And that's the context of the conversation.
Right.
I just thought maybe I share the fact that this is what I heard.
No, and you're absolutely right. I'm not here knocking one way or another. I totally validate what you're saying. What I'm trying to say though is I think from my perspective and my experience on this, there's just a simpler route, a much more effective and simpler route, and a quicker path to success.
Which go manual and then call it a day.
Half and half.
Yeah. Semi-automated.
Yeah.
Sorry.
Yeah, you have a script that will go out and actually look for, like what I'm doing right now with the last three coins. We had Maker, BNT, which we're doing now, and this new one called Storage. Look at that. It just moved up.
Mm-hmm.
Right? It's this thing what I have running is very dependable, and I would have made right there a penny. You know, not much, but it could continue to move up. Right?
Sure.
So, I don't know. There's just different approaches to it, but I'm starting to really feel that it's a half and half, like semi-automated, and just put a simple a stop loss and your trail stop on it if you have the capability to do it in your platform.
Yeah, and then for me, like receiving this kind of experience is valuable because someone might have spent years and years to do this, but it just listened to someone else's experience that say, you know what, it works the best to do semi-automated.
Yeah.
And that is a valid input, and then it's quite helpful.
But I mean, look, you have here BNT is moving up. Storage A did move up. Maker looks like it's moving up. But right out of those three trades, this one would have been the winner. Just in the last, 10, 15 minutes?
True.
And if I was able to trade like that for however many hours per day, I'd be happy. But again, I could be wrong. But it's just all about trying to find the simplest path to success. Yeah. And from what I've seen, the coding up of end-to-end strategy with an automated entry and exit,
it's just a waste of time.
It's very difficult. It's so difficult.
So when you open a position, if you open a position in a kind of automated way that I'm opening this position, but when the price goes above this or below this, just sell it. Would that be helpful too?
Well, as I said, you create an alert, right?
And then, okay, so you do it alert way. Then
yeah, you set an alert, and what you can apply, as I said here, is you can allow the trail stop will allow the position to run. Okay, and for the insurance purposes, you put in your stop loss.
Yeah.
Right?
Yes.
And then as you get better at it and you get more experienced at when you're looking at charts, and you may even get familiar with the nuances of particular coins, then you can scale up your quantity as well.
Mm-hmm.
That's how I'm starting to view it.
And then makes sense, yeah.
Because I don't want to, like, I'm 51, and I don't want to be 65 still trying to guess and trying to guess to code up a strategy. It's a waste. I'm really strongly feeling it may be a waste of time.
I agree.
You know, because I think the machine learning and all that, it really overcomplicates it, as opposed to just focus on the semi-automated way, you could call it. And if you use MotiveWave, you could probably get enough studies and strategies to be able to find what's gonna start to move up from within all the tools that MotiveWave gives you. Because right now I'm not using any technical analysis. I'm just using mostly trend and volume, and that's probably the biggest things that will enable you to be profitable. And as I said, if you're going to look at the bid and ask and level 2, well, it's already built into this kind of, call it small system, because it's all based on trend. And if the price moves up, well, that's because the bid and ask is working. And once it crosses that trend, then you know that's all you need to know, and you put an entry on that, regardless of whatever you think the bid and ask will be. All you're looking for is that the price moves up and above the trend, and once it does, then you put on your entry, and you can automate that as well with this setup for sure. Would you agree, Boyd? This is a good way to trade. I don't know if Boyd's out there.
He's on mute right now.
If you're on self-mute, maybe he's talking to somebody, I don't know. But from what I've seen, of all the things that I've heard about, in terms of indicators, trend is always the simplest and the best one.
Trend is your friend.
Yeah, exactly. And once the price crosses above that trend, and it's a strong trend, chances are it's going to move up.
Sure.
It's the simplest one, and all the math is built in, all the volume is built into it. So you don't have to really kill yourself to find the right strategy. But here, I think what would happen is with this bar, maybe that the stop loss would have kicked in and kicked me out, and I might have maybe broken even or taken a small loss.
Mm-hmm.
If yeah. So right
there,
okay. Yeah. I mean, but it may come back. But the probably stop loss would have been triggered by now, based upon what we're watching.
Yeah, which is a valid thing. Like, would you say that's the right thing to do as soon as that happens right away? Either you exit or the stop loss exit. Would you do that?
Yeah, I would use stop loss. It's insurance.
Mm-hmm.
Like, it may come back, yes. But you could probably then reapply the same alert and wait for the price to come back and cross the trend again, and hope that the price comes back and that you get more profit on that entry, on the next entry. So you could play it like that, and you could apply the same thing and apply a trend here, and just once that price crosses the trend, then you're good. If not, then the trend never happens, or the entry never takes place.
Yeah, these are interesting pairs that you are finding.
Yeah, but that's because I've got the scripts that I've been working on for a long time.
Right.
Especially
that finds your good pairs, yeah.
Yeah, well, that's why I look at trend. Well, yeah. in the mathematical, you just look at the past the historical prices, and you just apply a trend or a regression, and just go with and rank the ones that have the strongest trend. Because chances are there's two things that will go in your favor when you have trending pairs on anything, on any instrument, in any asset class. If you have strong trend, chances are it's going to move up. And if you take instruments that have a negative trend or a negative slope, chances are when you do put on a position, it's going to be a loser. But if you focus only on the pairs that have the strong trend, there's a higher probability you'll get profit with those pairs versus the ones that have negative slope or negative trend.
Okay, and okay, with regards to these pairs, like there are a few pairs are missing that I was like, probably there's a good reason for that. Like why Binance doesn't have like a Ethereum to Bitcoin, for example.
They do.
There's one side is missing. Like I have Bitcoin, I want to buy Ethereum, I couldn't.
Okay, are you referring to something like, okay, so Ethereum, Bitcoin?
Yeah.
Okay, so that exists. So what you're saying,
no, Bitcoin. I have Bitcoin, I want to buy Ethereum.
So Bitcoin,
and actually I do that because I have to pay someone.
So Bitcoin to Ethereum, that's what you're saying?
Yeah.
Doesn't exist?
No, yeah. Why? This is a good pair.
Yeah, but I think it probably has to do with the markets because, again, I can't really give you a solid answer on why, but I would assume it's because Bitcoin, well, I wouldn't be able to tell you. I mean, is there USDT in BTC?
USDT is there is a coin that is following exact US dollar, right?
Yeah, that's Tether, USDT.
Yeah, that there. So I thought that one exists, doesn't?
No, there's no USDT in Bitcoin. Let me just see if there's an Ethereum.
Are they against Ethereum? What's going on with the
no, but I think all those coins are major coins.
So what's wrong with the major coin that you cannot buy USDT to?
No, major coins are the ones you pair with the other coins. So it's like BTC, Ethereum is considered like in a fiat currency.
True,
I think so. Yeah.
Now, if you really want to do it, like I really have to get some Ethereum, I have Bitcoin, then so I think that the safest pair is the Binance coin, right? So I should, is that the correct assumption? Always try to convert to.
How would you define as safest?
Like the most practical, the available, like not the safest, like in terms of the safety, it just
the least volatile.
The most common way of doing it
is. If you're
is
gonna pay somebody crypto and you're looking for the most liquid, highest volume, and the least volatility.
Let me explain. I have a lot of Bitcoin. I need some Ethereum. How do I do it?
Well, you have to sell the Bitcoin and then buy Ethereum.
Okay, so what do I sell it? What is the best? I don't want to sell it to fiat currency because it costs me. I want to sell it to some common. So what is the most common denominator of all?
Buy and sell your Bitcoin in USDT or Tether, and then buy the Ethereum from the converted Tether.
Yeah. So
we just noticed that you cannot use Tether to buy Ethereum.
No, you can. It's quoted in Ethereum. It's quoted in USDD. When you go to Binance or you go to
Brian,
market cap, it's quoted as
Yeah. So what
USDT.
what you want to do is you want to have majority or holdings in crypto in USDT because it's tethered to the US dollar and it's the least volatile and it's the biggest one out there.
Okay, and also you always can buy, sell everything with Tether.
Majority of them, yeah.
Yeah, majority of them. Yeah.
And the other thing is with the futures market, that's why they quote everything in Tether in USDT.
One more question. How about Binance Coin?
You can use Binance Coin too.
Well,
so
the only advantage Binance Coin gives you, it's just lower commissions.
Yeah.
So isn't it better than USDT just to get the Binance Coin?
You can.
But the difference is very minimal, isn't it?
The commission fee is so tiny. It's so marginal.
Yeah. Okay, let's just simplify my question. If you have a lot, like you have certain Bitcoin, you want to get Ethereum, would you use USDT or Binance Coin?
Either of them.
Doesn't matter, right? Just pick one and then get your conversion. Sure.
If you want the lower commission fee, do it in BNB.
Yeah.
What is BNB?
Binance Coin.
Binance Coin. Binance Coin, yeah.
But I would tell people, if you're gonna like open a crypto account, just keep everything in Tether, USDT, because you have to factor in the volatility of
that's
it.
safe.
Yeah.
Okay, and it's it's actually more liquid than Bitcoin.
Okay, so can I go one step back and then because I missed one step. I didn't explain one step. I had some Canadian dollar, and I wanted to bring it to Binance. So I went to the fiat currency conversion, and I said, you know what, the most obvious option is just buy Bitcoin. Are you saying I should have bought USDT at that stage?
Yeah, I would have.
Yeah.
So I need later on, I need to verify if they support that.
Who?
Like you pay US dollar and then get USDT. Yeah. I was wondering if they support it, but I have to log in and then do.
Where? Binance?
No, I never buy from Binance because it's awkward. But the one that I'm working with is, let me tell you what I'm working with, and then I'm happy. But you folks let me know if it's a good option. It's Canadian. It's in downtown Toronto.
Yeah. Coin Square.
It's called BitBuy.
BitBuy, yeah. You can use. I use BitBuy for some of my coins. Yeah.
So you BitBuy and then you. Are you in Canada?
Yeah.
He's Toronto.
Okay. He's in Toronto, sure.
Yeah.
So you pay Canadian dollar and then you get USDT?
I get whatever I want. In this case, I usually buy different coins.
No. Let me. You want to invest in Bitcoin, so like some kind of cryptocurrency.
Yeah. I use Canadian dollar. Yeah.
So you got a lot of Canadian dollar. You want to bring it to Binance. The way that you bring it, you go to BitBuy.
Yeah.
You pay your Canadian dollar. You get USDT. You don't get Bitcoin. You don't get anything else. You get USDT, and then transfer your USDT to Binance, and then do your trading. That's the best way to do it.
Everything's done in USDT.
I don't know if you can transfer to Binance.
Because I easily transferred my money, my Bitcoin, to Binance.
From BitBuy?
Yeah, piece of cake.
Okay.
That's fine, but you'll get one, like, if I told somebody who had $1,000, whatever fiat currency it was, I would tell them to put the 1,000 whatever into USDT, because whatever you trade most of the time will be out of USDT.
Point taken. Yeah. Agree. But to transfer fiat to crypto and then transfer your crypto to Binance, then still you would say the same is valid. Yeah, try to use USDT.
I would always start from USDT.
So where are you? Are you in Toronto?
Yeah.
Oh, okay.
I am close by.
So well, you can just buy direct with Canadian on Binance.
Yeah, that's
no.
fairly new.
Huh? What do you mean no?
First of all, I think Binance kind of commissions are high. The cheapest way to do it, I found, is BitBuy.
Well, I mean, to me, it's not a big deal. I mean, how much,
So again, I'm trying to establish like a proper procedure. What is the most efficient way? And then to me, BitBuy, this is what I found is BitBuy has the least amount of commission when you want to bring, because it does it through direct. It's not through credit card. It's integrated with Canadian financial institutes. That's significantly.
Yeah, I know, but you can buy with the, we can buy on Binance. You can use a debit card. You don't have to use a credit card now.
No,
to me, that is not okay. So when I was buying it, it wasn't possible. Debit card, because Binance is not integrated very well with Canadian. It's integrated with credit cards. Credit cards are expensive.
Yeah, but what debit card is it? A Visa debit card you have or not?
Okay, but one more thing. The commission of Visa. So when you want to buy coins, I think Visa or Master, like a Visa kind of transactions, are more expensive than direct bank deposit. So if you are transferring your fiat?
Well, I don't know. To me, it's not a big deal. I didn't see much difference.
There's also this coming, Ali, is in Canada. Eventually, you'll find the Visa debit card from Binance. So you just transfer once into Tether, and then you'll pay a commission fee, but then you have everything in Tether, and you can do everything through this debit card.
You can also do electronic transfer. I'm sure it's cheaper on Binance.
Can you put that link, the one that you showed me? Can you put that link in a text window so I want to study that? That is interesting
sure.
development.
I'll put it in the chat box.
Yeah. That is interesting development.
Yeah, that's because the Binance is teamed up with a Maltese bank called Swipe. Mm-hmm. And Kraken just got the same thing now as well. They started their own bank out of Wyoming. So those things are coming where you will get lower fees. Mm-hmm. And just by the way, look at Storj. It's moving on up 2 cents.
Yeah.
So that script can do pretty good.
No, for me, I don't usually look at the fees. I just wanted to make money.
Yeah.
It's very inconsequential sometimes, more especially if it's going to cost me a few dollars.
Yeah. So sometimes it adds up, depending on the size.
But I had a problem because before I could buy direct using my debit card or whatever on Binance, I used Pax. It was a nightmare. Pax is another, is like USDT, but it's not as popular. Mm-hmm. So I did a wire transfer to Pax. So the address that I used, it was so confusing. So my money didn't go direct to Pax. So it went to another bank, so-called whatever. Then it took so long for my money to go into my account at Pax. And then Pax, I wanted to transfer that money to Binance. And then Pax, they started asking me for all sorts of, information. So I wrote them, I said, why should I send you all this information? I sent you all the information when I sent you this money, and it came from my CIBC account, a reputable Canadian bank. All my information is there. So eventually they transferred my money from Pax to Binance without any hassle, because I was so upset with them. So now that I can buy direct on Binance, I don't have to deal with all this third-party, crap.
And here's what you get for 1,000 Canadian through a Visa debit, 751 USDT. And the public market would be 761. But even if you went through another third party,
can I just see the CAD was not available? I don't know what's going on.
Yeah, but no, they just updated it maybe a month, 6 weeks ago.
Yeah, that's what we are saying. I just used it. Yeah, before it wasn't. And you can do electronic transfer too.
Yeah.
Yeah.
Yeah, which would be even cheaper. So
exactly.
You can buy bank deposit right here.
Yeah.
Yeah, and then you can wire it in. So here's your fee, 1.8%. So that's probably in line if you were. I mean, what's PayPal? You're paying 3-point-something%. This is much cheaper. Here,
Yeah.
and they got 0.5% or half. Was it 0.5 euro fee? 50 euro or half a euro. That's nothing.
No, it's nothing. That's why I don't bother. In fact, with the hassle that I went through, I'm just happy to use my debit card, get my money immediately, instantly, and just start buying my coins.
Yeah, that transferring has come a long ways now.
Yeah.
Much, like, majorly improved.
Exactly.
So when I was buying, I saw like Australian dollar is available, UK is available, US dollar is available, Canadian is not available. I was like,
no,
what's
changed now? It's changed now.
Yeah, it's
no,
changed,
I was thinking, okay, so what's wrong with Canadians? Like, why not? Is Canadian dollar not good enough for you?
No,
it's just
there's not enough market demand for them, but maybe just now they've added more people are using Binance.
You see, I was so frustrated when I was trying to, I opened my Binance account a long time ago. I couldn't do anything. I tried to use all sorts of ways to fund my account, It was so frustrating.
But look, you can only do the deposits from US dollar or euro or British pound, but not Canadian still, and Australian.
So what was the other path you went?
Debit card.
Okay.
Through buy crypto with the Visa debit card.
Oh, that one. So still I need a Visa debit card.
Yeah, it's the better way to do it anyways.
Yeah, you can do electronic transfer. You can do Visa debit card.
How do they know it's a Visa debit card, is not a normal Visa?
No, when you put the information there, everything is automated.
Yeah.
You are the IT guys.
So, I mean, I didn't expect they go that far. And then that they just go and say, no, this is a Visa debit card.
Yeah.
Now, why would they care? So, folks, where do you get your Visa debit card right now?
Bank.
From the bank, CIBC more especially.
They have Visa debit.
I've had it for years.
Yeah, same here.
Yeah, that's what I use. I never use this credit card crap.
So so TD doesn't have a debit card. It's always Visa debit card, right?
Well, mine's called a virtual Visa debit card. It comes right out of my account, but it's a Visa card.
even me.
Which bank? So you're with
CIBC. I'm RBC.
I'm with CIBC. Mine is Advantage debit card, Visa.
Okay, so RBC, because I'm with RBC, I just get a Visa debit card.
Yeah, let me just
and I do stuff with it. Okay.
RBC virtual debit card. It's only for online. RBC. Here you go.
There's nothing that you cannot do with a Visa debit card. Very few things.
Yeah, and that will come right out of your account.
Yeah.
And go right into your Binance account now.
Exactly.
And it's easy peasy. It's much better now than a few months ago.
Oh yeah. I was so happy when I saw that.
Yeah.
And immediately I tried it and it worked like a charm.
Yeah.
Just was one thing, Brian, this Visa, when I give this Visa to them, is there any way to put a limit that the transaction cannot go, or certain, like I put certain kind of limit?
Well, you choose the limit, you choose the amount.
They're not going to charge you more than what you put in.
No, right. But if you give this Visa to someone with the whole thing, how much they can take it? They can take all of your account?
No, but you're still insured. If there's a problem on that electronically, and let's say Binance rips you off, like you have $100,000 in the account, cash, and you use your Visa debit, and you link it to Binance, and you transfer $1,000, and you have $100,000 in the account. Let's say Binance steals the money, $100,000, RBC will protect you.
Yeah,
100%. That Visa debit will protect you 100% if you got something online, any type of online fraud.
In fact, it happened to me just recently, maybe 2 weeks ago. There was some, an online newsletter that I signed up. with, and they didn't recognize it. They didn't pay, you know.
Yeah.
They sent me a note that there was something fraudulent on my account.
And what they'll do is say, did you authorize this transaction?
Yeah,
They
exactly.
say no.
Yeah.
Nothing happens. Your money's put
Yeah.
back in.
They're very good now. They're
Oh,
very,
it's
very
amazing
good.
Yeah.
Yeah.
I wouldn't
It's
worry
amazing.
about it.
Yeah.
Okay.
Amazing.
The virtual Visa debit cards are incredible. I mean,
Yeah.
I don't know. You're saying that TD doesn't have one?
TD only provides, it's not the virtual. TD doesn't have a debit card. It's just a Visa card.
Screw
You go
Oh.
to-
Screw TD, man.
Forget about TD. What is that?
No. What I was saying is TD had it, but I was skeptical to put like unleash one of these visas on my main checking account.
No. With RBC Visa debit card, any fraud on that card that's linked to your account is 100% protected.
Yeah.
It's not like, okay, I have a feeling that it's okay. So you speak highly on RBC, and then I was tracking a lot of complaints and cases against RBC. So
Well,
Brian,
there's-
you have your faith on RBC?
Well,
Because
I'll
I
tell
don't.
you this. If you look at every single bank in Canada on their negative reviews, you'll probably get the same amount.
Yeah. But you see, Canadian banks are regulated. That's the other thing. You know,
And you're
it's not.
protected as well.
Yeah, and protected, you know. So that's why whatever CIBC is doing, RBC is doing, guaranteed.
What you have to understand, it's Visa that it's the setting the policies here. So
Yeah.
Visa says this is how we're offering this product through this bank. The
Yeah.
bank has to adhere to that policy. So
Exactly.
it's not like RBC is setting the policy. It's Visa.
It's Visa, yeah. You know?
And you're protected. I've never had a problem with Visa debit. I've
No,
had
that's
it for-
that. You know, this has
years.
been the best because
Yeah.
you don't need a credit card. What is it for? You know, you just use this for most of the transactions. You're good to go.
Yeah, and soon PayPal apparently will have offer Bitcoin as well. But the thing is, I've talked about the ledger, and if you can get money into your ledger hard wallet, crypto wise, you could transfer from crypto in the wallet to Binance as well, and they'll put it on the blockchain of Bitcoin. That's guaranteed. You'll get your money, or Binance will get the money.
No, Binance is powerful. There is nothing close to them.
No.
They're so innovative.
I
I just earned the 3 coins. You know, there is a new currency that they just listed,
Yeah.
and so I did some. I sort of earned about three coins, 3 on that currency. So I'm still waiting until the end of the month. It's very interesting what is happening with Binance.
Yeah.
Yeah.
I mean, I like. I mean, I'm very excited with what Binance is doing. We were concerned about how Binance was handling the DeFi, about the credibility of it, and look what they've done. This is what they. So now, when you come under markets, you have these things called zones. So you have DeFi, proof of work, storage, innovation. So all these newer, higher risk coins now are separated in their own market.
Yeah.
And then you still have the traditional spot market, which works with Binance. And then you have the futures market. And as I said, there's the options market as well. That's available through the app or your mobile. But the futures market's pretty good too.
Yeah, the futures market is good.
Yeah, I mean, it's always changing. This thing got. I mean, here we got another one. This is a new feature, Simplex, or third-party payment. What's that? This is the thing. It's always changing. But if you got like a couple of bucks, throw it into Binance and start trading it, and you may be surprised on how it plays out.
Oh yeah, no, Binance is good.
Yeah.
I'm so happy.
Yeah, same here.
By the way, when I go through that process of buying USDT with the Visa MasterCard, at the bottom, the third step says complete 3DS safety certification. What is 3DS safety certification?
I don't know. Google, maybe.
Okay, sure.
I don't know.
What is that?
No, I would go for Google, but that may be something that.
Yeah, but is that what they're asking you?
No, there are at the bottom it says complete 3DS safety certification. If Binance is asking me to share my driver license, stuff like that, that would be a kind of something negative.
Yeah, but when you open an account, do you have an account with them?
The way that I set it up is I provided all of my information to bitbuy.ca because it's a Canadian company. I trust Canadian companies very much.
Yeah.
And then when I transfer to Binance, Binance says you do not need to verify your identity as long as you are not withdrawing more than 2 Bitcoins. So 2 Bitcoins is like a $20,000, 2 Bitcoins a day.
Yeah.
So like a 20,000. If I'm in a position that I want to withdraw more than $20,000 a day from Binance,
but understand this, Ali. I'm in the same boat. I'm an anonymous account on Binance, but do understand that if right now you're brand new, you want to go to Binance, I don't think they allow anonymous accounts anymore. The thing is, when you trade anonymously, they will, and I've heard that they can shut down your account. And let's say you got 20 grand in their equivalent of US or Canadian, you could lose that and you won't get your money back. So it might be to your advantage to do the know your customer thing.
Oh yeah, that's what I did. I did that, because what happened when I wanted to do my trading, they said there's no way I'm going to trade unless I did my KYC.
Yeah, that's new.
So, I mean, everybody is doing it. But if you're in Canada, it's different when you're dealing with Canadian exchanges. But if you're dealing with Binance, there's no way.
Binance is not asking me anything. So far, they didn't ask me anything. And I'm not doing anything big in Binance.
Because exactly that. If you were suddenly building up an account of like 20, 50,000, they'll be on you to do the KYC.
That's a valid point. And
also, if you're gonna use your Visa, they'll ask you for that. You're not gonna buy without doing your KYC.
And they'll verify that Visa debit against what you supply.
Yeah.
Because they're under a lot of heat right now globally.
Yeah.
And they don't want to screw up at all.
Yeah, it's understandable. It's understandable. For me, I have no problem with that because, they have to protect themselves. It's themselves. They are a huge company, and the US can shut them down.
True. Whenever I get to the point that I have that, right now I'm just evaluating Bitcoin. I'm learning about it and trying to evaluate, and then it's just something that should I stay focused, because my specialty is a stock market. Probably definitely not as expert as you folks, but I had profits in the stock market. And right now I'm in a kind of where should I switch, stay heads down, focus on stock market, or switch to this. But if I get to the point that I have an account size of $50,000, I will nail this thing a lot. And I think by that time things will change too. Because it won't happen overnight for me to have a $50,000 account in Binance, and then this that you are saying is a factor to my development, my cryptocurrency development path.
But for me, what made me go with Binance was the frustration with Canadian exchanges. They have got only 4 or 5 coins.
Yeah.
So what is that? If I want to buy VChain, Chainlink, I won't get it with Canadian exchanges.
No,
those are
powerful. Little volume too.
Yeah, and those are the currencies you want to be with. They just have Bitcoin and Ethereum and a few other, Litecoin, but that's nothing.
Right now, I'm looking at 207 coins in Tether.
Yeah.
You won't get that on a North American based exchange.
No. So that's why I bit my tongue. I said, I'll just give them the information. Where are they going to take my information anyway?
I mean, look. If you file a tax, which you have to by law in Canada,
Yeah.
CRA has been hacked already. You know what I mean? So
Yeah. Exactly.
don't stop to think that if Binance is going to get hacked, it's going to be any different. It's
exactly. And to me, my point is I should be making money instead of worrying about things which are of no consequence. You know?
And if you go with like a U.S. or a Canadian exchange, your performance is going to be held back because you're not able to go with the more newer, trendy coins.
New listings. Binance just said they are listing new coins, and you could make more money with new listings.
Yeah.
Canada, you're not Canadians. The Canadians, there are how many exchanges? Maybe 10. They have the same coins.
Not just that, but look at all the fraud that happened with the Canadian exchange, like Quadriga, and that new one that replaced Quadriga was a fraud as well. Of all the countries in the world, the Canadians,
and even CoinSquare, the guys resigned because they were, phishing.
Yeah. So don't stop to think that the Canadian exchange is the safest in the world. It's probably the worst.
Yeah. And it's okay to feel comfortable. You're at home, but still, if you wanna make money, you have to venture outside.
The thing is, to be honest, if you're worried about losing money, just start with something that you live in a world where they can hack it, steal it. Start with $500 or $1,000.
Yeah.
And if it gets hacked, it gets hacked. You don't go to them again.
And
this is where I am right now. It's like I count signs of 500.
At the same time, imagine if you did put $1,000 in 6 months ago. How much? I had a guy that did 2,000 British pounds a year ago. Now he's up 6,000.
You see, I was telling my friend last time. I said, how much can you, afford to lose if you have 100,000? Can you afford to lose 5,000 or 10,000? He says no. I said, then, you're not ready to make money.
Yeah.
You must be willing to lose money to make money.
Exactly.
So that's the way life goes.
Yeah. Nothing ventured, or no, what's the saying?
Nothing ventured, nothing gained, whatever.
That's right, yeah, that's it.
Yeah. So, and as Brian says, everybody is being hacked. I mean, the US, the Russians are always hacking the US.
Yeah.
And
Binance was hacked, but nobody lost money.
No, nobody lost money. Yeah. It's not like these other fly-by-night exchanges with two guys with a computer like me at home. Eh?
Yeah, exactly.
That's what happened with Rodriguez. The guy had, the address in his pocket.
Yeah, the other point that Brian you mentioned is I thought Binance is a Chinese company, and then it's based on if the company is Chinese, probably government of China has some stake in it. Then you mentioned actually no, it's not, and the government of China is not very happy with Binance, and
that's why it's based in Malta.
That's right.
Yeah.
And the servers are in Japan.
Japan and things like that. That was mind blowing. I didn't know that. I thought Binance is more like a Chinese stuff.
No.
And the guy who found is a Canadian.
Yeah.
He actually was in Canada.
He's from Toronto.
Yeah.
You're kidding me.
No.
Yeah.
Binance founder is from Toronto?
Yeah.
Wow.
Z. Yeah.
CZ, yeah.
He was working with the company in Montreal. That's how he learned he was dealing with, I think communication stuff.
Wow.
Yeah.
Yeah, and
he's a nice guy. Yeah.
Buterik as well as Vitalik Buterin. He's from Toronto.
Yeah.
Toronto.
There you go.
And Elon Musk went to Queens.
Yeah.
So there is a Canadian influence out there.
Yeah, there's a lot of.
Yeah, the problem is they just move away.
Yeah, because
all this good, all the successful Canadians. Not that you guys are not so successful, but all the Hollywood actors like Ryan Gosling. Yeah.
But look at when the Raptors won, right? They won the championship in the NBA. What did the guy do? The lead guy, he says, I want out because I don't want to pay tax anymore. And he went to LA.
Yeah, because,
they don't want to pay tax.
Exactly,
That is
and things don't move as fast,
I'll tell you how pervasive it is, Ali, when it comes to tax with crypto. We went through it. Remember this, Boyd?
Yeah, we did. Yeah.
They want your wallet ID. It's like they want a key to your house.
To give me information, give me some detail. What happened?
Oh, I'll show it to you.
So you felt your you filled your taxes with CRA, and then CRA came back to you and says, "Show me your give me your wallet ID."
There's an actual document out there. I'm just pulling it up. Just give me a second here. Okay, this is it here. So we went through this, and everything they want a 50% capital gain. So you make, let's say, $1,000 as a capital gain. They want $500 in tax. And the other thing is what really got me going was the wallet ID. See, the digital wallet and cryptocurrency addresses, they want that. Or
they said that you have to maintain it.
Yes, but it's like, well, when we come around to do an audit, we want a key to your house.
So isn't that the same that when you go to bank, like they want your bank accounts?
They already have access to my bank account.
But this one they want. Can I have? Can you paste me this link?
Sure.
I need to read this.
Yeah.
So I'm thinking, you know what? Maybe this cryptocurrency is too.
The crypto.
Like you don't go through this when you do a stock.
No. Yeah, but the crypto gives you a lot more potential to make money. It's 24/7, never closes.
Yeah. Yeah.
You can make a lot of money with no leverage needed. I mean, I could show you. Let me show you some charts here. If I showed you this one, this just doubled from. Went up 10% a few days ago. Right here, this little guy. We looked at other ones. Do you remember any of the fast-moving ones, Boyd, in the summer?
YFI, I think.
Oh, yes. YFI. We got to do that one. This is what we were watching in the summer, Ali. Okay? This is what we were watching. So if I do a weekly, this thing started at $5,000, went up all the way up to, how much, $40,000?
Yeah, 40,000, yeah.
In a matter of 2 days, from 5,000.
Yeah, that's tempting.
Yeah, but, to me, the way I look at it, whichever way, you eventually have to pay taxes. But I think the bottom line is you make a lot of money. I don't care.
Okay, by the way, the capital gain of this crypto is the same as the capital gain of any other asset, right?
Yeah, of stocks. It's 50%, isn't it?
50%, yeah, that I'm very familiar. I do my own taxes. So I don't see any differences. It's just they want the wallet ID because they want to verify it in case they want to get more information.
Yeah, they just want to know where all the money, where it is, how much you made.
And then you can claim a capital gain when you have other incomes. But if this is your main income, they might come back and say, no, this is not a capital gain. This is actually your income. So it doesn't have, if I go some kind of income, side income with cryptocurrency, I think that would be my capital gain. But if someone does it full time, some accountant might
that means, like in my case, if I'm doing this full time, I'm automatically taxed 50%.
Okay, so you're not capital gain. You are actually like it's your corporate, like a professional trader.
Right.
But you can have a lot more opportunity to claim expenses.
Yeah, that's different. Yeah, that's different. Yeah.
Yeah, all of his income would be probably all the laptops, everything he buys, his car.
But
his roof repair.
But Ali, it's fine and good. Back in the day, they had a point where they had no limit on capital gain. You could put all your profit in a capital gain, not be taxed. That was back in the days of Mulrooney. And then Kretchen came along and said, "Oh, we're going to make it $500,000." Then it went
those
down
liberals.
Then it went down to $250,000. Now it's 100,000 lifetime. So why should a government limit me on how much profit I can put into something and put it into a tax-free vehicle like an RSP, right? As opposed to, because I'm British, I could go to like the Channel Islands or Isle of Man. I've talked about this in the past. I don't have to worry about this stuff. I'm just taxed at £134,000. After that, everything's tax-free. So I asked myself, why would I want to live in a country that steals from me? Did the government help me get to the point? Like, did they give me a tax credit, or did they give me anything to get me to the point of being able to profit through cryptocurrency? But at the other end of it, when I start come to the day where I start making profit, now they want basically 50% what I make.
But that is painful. I agree.
Oh, it is.
It's gonna get worse and worse. Like, you live in Toronto, your property tax is gonna go up. Okay, they're gonna start bringing in user fees, all kinds of stuff. It's gonna get harder and harder to make money in Canada as anything, as a business. I mean, look, you should listen to some of the videos I listen to, why people are moving out of California. It's beyond maddening. Mm-hmm. And Canada is no different. I think it's just as bad as California. But I ask myself, if I'm at my age where I need to retire soon, I want to be in a tax-friendly region in the world where I don't have to worry about these things.
So I have all these concerns, and that's just half of my concern. The other half is how they spend the tax.
Yeah. Exactly. I mean, that's a political thing, and we could go on and on about it, but it's not going to change. Okay. It's not going to change anything what the government does and how they spend money, right? That's not going to change.
Yeah. I agree. Brian, you mentioned $100,000 lifetime. What is that?
Well, they used to have a point where there was no limit on there was no limit on your capital gains. You could have a lifetime capital gain tax-free. And then it went, like I said, $1 million, $500,000, $250,000, $100,000, and now I don't think they even have a capital gain limit anymore. There is no limit. It's because the government is losing all kinds of. They're just all I can say is they're just out of control. But there was a time when you could have a capital gain, and that would be left and be tax free. Oh,
so that's how they added tax-free saving account.
Yeah, but it's what, $5,000 per year, or
a year?
They determine the limit. I mean, it's nothing.
Yeah, wow, that's nothing. 5,000.
Like,
that was before my time to come to Canada. During the time that there was no limit on capital gain.
It used to be good, but up until I don't know when they started. It got worse and worse in the '90s, and then in the 2000s when Querstions came to town. And now there is virtually no capital gain limit on there is no capital gain limit. They just take on capital gains. It's pointless.
Oh, actually, NDPs, they're trying to actually make it, right now it's a 50%. They're actually trying to make it like 100%. Like, it's not like right now you have a 50, like if you have like $100,000 capital gain, you divide by 2 and it becomes $50,000. It adds to your salary. And then they're actually going after that. They say, no, it shouldn't be 50%. 100% of it, it adds to your income.
Yeah, but we know the NDP, it's socialist, so they'll be wasting more money on something stupid, you know?
Yeah. Anyway, you guys, I'm going to retire.
Okay. Thanks for coming out, Boyd.
Yeah,
thank you
Brian.
so much.
Thanks, Ali. And
thank you. It was a pleasure speaking with you. Thank you.
It was nice.
No worries, man.
Yeah. See you next time.
See you guys. Thank you. Take care. Bye-bye.
See you. Bye. You still there, Ali? Oh, Ali's gone. Boyd's gone. Oh, yeah, everyone's gone. All right, guys. Have a good one. Thanks for watching.